To soar amid supply shortages. A fire knocks out part of a UK power cable as analysts warn of blackouts. Car sales slump. European registrations drop 18% in August from a year ago as the global chip shortage continues to squeeze output. And SpaceX sends civilians into orbit. Elon Musk's venture blasts off for a 3-day voyage in what could be a new era in space travel.
Let's take a look at the futures then, Tom. Just 30 seconds or so, 20 seconds or so until the start of the European equity trading session. And European equity market futures have been pointing to the upside, in particular over on the Paris market. FTSE futures may be seen as a bit of a laggard. Interesting to see that the markets really took to the utilities and energy play yesterday around the gas story. They bought energy stocks, they sold off on utilities. As we've seen some of those gas prices come off a little bit, you wonder if that's going to reverse just a little at the margin.
Yeah, the Italians wading in as well in terms of the government response with 3 billion euros of aid. At least they're lining that up. In terms of how things are playing out, then, as you say, a mixed picture when it came to the futures. In the UK, you had some political changes yesterday, a reshuffle by Prime Minister Boris Johnson of his government, but it really was the downing of that power cable between France and the UK that put that energy story back into the spotlight, particularly for the UK. In terms of how things are playing out, though, on the FTSE 100, just the first few seconds of today's open this Thursday, you're seeing gains of 0.2%. A slightly brighter picture over in France, as the futures suggested. The CAC 40 is up 0.5%. In Spain, similar territory, gaining 41 points. We can look at the sectors as well. Anna was absolutely right to point out that divergent picture, the flip side between utilities and energy yesterday. It was utilities that was bottom of the pack, energy that was near the top. On the back of that energy story, of course, supply constraints around gas continues to be part of the conversation. Investors drawn to that story. Today, it's technology gaining 0.3%. A similar picture for banks, close to 0.4% in terms of the upside here. Financial services are also up about 2 points. And autos, on the back of that story, that those registrations are falling 18%. Despite that, you're seeing gains of 0.5%. The chip shortage is seeing no end in sight when it comes to the auto sector. Let's move it on then to the map and see how things are playing out across the region, but also the question of Asia as well. Here, when we look in at the UK, gaining 0.3%, the CAC 40 up 0.5%, as we were talking about. The Asian story was focused on what's happening with the Macau casinos. That continues, the regulatory squeeze, but it's also the property stocks that bleed through from the Evergrande story. You're seeing the big real estate names listed in Hong Kong falling, some of them 10%. The focus also on the gaming space as well. Mainland stocks fell, Hong Kong fell sharply as well. This is the picture, though, a slightly brighter one in Europe. And in terms of what happened yesterday overnight in the US, the Nasdaq snapping 5 days of losses to end up 0.8%.
So that's a look at where we are on these European equity markets then, opening up. It looks maybe a little more positive than we'd anticipated, certainly in the London market, up by 0.2% then, Tom. Hugh Gimber, JP Morgan Asset Management Global Market Strategist, joins us. And Hugh, give us your overall investment thesis at the moment. How much are you seeing pullbacks in equity markets as an opportunity to load up on more stocks, or do you think you prefer a different strategy?
Good morning, Anna. Well, we're still fairly positive, frankly, about the outlook. I acknowledge that there is a long list of concerns at the moment when we're talking to clients. It's dominated by concerns around inflation, supply chains, Delta variant, China, you name it. There's a lot to worry about, clearly. But ultimately, we see the backdrop underpinned by a still very strong consumer across the globe and a policy mix which is extremely accommodative. I think at the margin, what we've seen over the past couple of weeks as well is that some of those concerns around the Delta variant in particular are starting to fade. It looks like COVID is moving into a slightly better situation in the US especially. Similar story in terms of China starting to move away from some of the sharper lockdowns that we had over the summer. And so I suspect that as we move through September, we could be looking at sentiment really bottoming and people starting to refocus on what is still a strong underpinning to this recovery.
Hugh, you just touched on the Delta and the variant in the US, the view that it's starting to ebb now. Certainly hospitalizations and those numbers that had been very high starting to come down. Obviously good news on a personal front across the US. And in terms of China, we've got a redhead crossing the terminal now saying that China has fully vaccinated 1 billion people. The population is around 1.4 billion. 1 billion people fully vaccinated. Does that just reinforce your view that maybe the Delta variant now, we can put that behind that, markets can look through that and focus on future catalysts, earnings maybe?
I think that's fair. Now, still, obviously, trying to forecast the path of COVID-19 has proven to be a very difficult task. But at the margin, I think where markets are going to focus is on consumer sentiment and is on mobility. And we're seeing that start to improve now. Now, clearly, there are pockets still to monitor very carefully. But the thesis really throughout this year has been that all of the pent-up demand that was created during the pandemic is going to flow back into the economy. Now, I think the Delta variant means that that's more like a drip than a flood of that money back into the economy. But that's no bad thing necessarily. Because just imagine the counterfactual. Imagine that that had all surged back over the summer. Our conversations now would be dominated by questions around overheating and central banks being a long way behind the curve. So it's a dent to the recovery. It's a dent to the pace at which consumers can get back on track. But ultimately, we don't think the recovery is being derailed.
Hugh, do you still look at the markets in terms of a trade-off between tech and growth on the one hand and value on the other? Do you think about it in terms of which style wins? Or do you think there's room for both of those styles at the moment, a sort of barbell strategy? I think it was, in fact, maybe some of your colleagues who've been talking about employing a barbell where you have both tech and growth stocks, but you also have value, expecting both of those to benefit on a stock-specific level.
I think that's fair. I think there are good reasons to see opportunities in both. But at the margin, this for me is an environment where we see greater room for catch-up from some of the more undervalued names. Because I think, frankly, we're moving into an environment where you're going to see multiples continue to contract, but earnings growth to more than offset that move, therefore taking the overall market higher. And so you're looking for the parts of the market where you see the greatest room for earnings upgrades. And there, I think that is within the cyclical sectors, and also the smallest room for margin compression. And again, you take an area such as financials, trading, relatively cheap to the broader market, still ample scope for earnings to be upgraded as we move towards 2022. I think the opportunities are greatest there, but it's right to highlight that this is more of a catch-up scenario than a full rotation from growth to value.
Hugh, does that take you to European equities? We heard from Jeff Gundlach saying he's buying European equities for the first time in a long time. State Street telling us that they love European equities. Is that where the big cyclical play is at this point?
I think that's very fair. I mean, it's quite unusual for you to be talking about lots of people being excited about European equities at the moment. That's a very unfamiliar stance if you look over the past 5 years. And certainly positioning and flow data would suggest that there's still plenty more scope for investors to be adding to Europe. And in this dynamic of what we expect to be cyclical leadership, where we expect bond yields to be rising over the next 6 to 12 months, that favors the market composition of places such as Europe. I think you could put Japan into that category as well, with the index composition just really better designed for the macro environment that we think we're going to be moving into. You take the pluses on the recovery fund, et cetera, et cetera. I think there are lots of good reasons to be optimistic about the European market today.
Okay, and we will get in our next conversation, Hugh. We'll talk about whether the higher gas prices and energy prices pose a threat to European corporates in terms of the demand story or indeed on their cost base. So we'll get back to that. Hugh Gimber, JP Morgan Asset Management Global Market Strategist, thank you, and stay with us. Just a red headline across the Bloomberg saying that Lagardère jumps by 20% on Vivendi's plan for a takeover offer. So this is very much in the French market. Vivendi is planning to make a bid for Lagardère if regulators approve its plan to buy out Amber Capital's stake, a deal that would create one of Europe's biggest media companies. That is the lowdown on the French media space right now, and clearly moving things around in the French markets. Coming up here on this programme then, as I mentioned, we'll focus in on the energy crisis. It has been escalating this week. Gas and power prices have surged earlier on this week, coming off their highs just in today's session, but lots to talk about in terms of that higher energy price. This is Bloomberg.
Inflation. So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up, and it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
Welcome back to the European Market Open. 11 minutes into our European trading day this Thursday, and European equity markets point to the upside, as you can see from that graphic. Across the board, we seem to be a little bit higher on European equities. Let's take a look then at some of the stocks that are on the move then. And Tom, we'll start with Continental. This, of course, is a supplier to the auto sector. We know that the troubles the auto space has been in of late because of the chip shortages, meaning that not as many cars can be made. This is a bit of a technical adjustment, though. They're spinning off Vitesco, which is their powertrain unit. That's going to be trading separately on the DAX. That starts trading separately on the DAX as of today, I think. And so as a result, the Continental share price marked down by 12.6%. What's the story at Ryanair?
Well, we're going to touch on Lagardère. You flagged this with that redhead before the break, and you broke it down for us in terms of that Vivendi takeover plan. So we want to see how the stocks are reacting. You can see gains of almost 21%, just under 21% for that company. So the offer from Vivendi, they're going to buy a stake for €24.10, so still below the price that we're seeing currently now for Lagardère. 23.50 is the price. So Vivendi offering to buy out this company, Lagardère, rising as much as 21%, as we said. said it's buying a stake in the media company. It plans to make an offer for the rest of the shares as well. So some solid gains at the back of that takeover news for that French media company.
I should probably just mention the story on Ryanair, as I mentioned it, was that they're increasing their growth goals, which is, important to reference when it comes to the recovery of aviation post-COVID. Let's get to IG Group then, the trading business. First quarter revenues coming in above estimate for this company, and that is the driver behind the stock this morning, up by 4.9%. Let's get a Bloomberg Business Flash then. Top corporate stories we're covering this morning. Here's Laura.
Thanks, Anna. Evergrande's onshore real estate unit has suspended trading for all of its bonds for 1 day after a domestic ratings downgrade. China Chengxin cut Evergrande Real Estate's rating to A from AA, keeping its bonds on a watch list. Earlier, Chinese authorities told major lenders to China Evergrande Group not to expect interest payments due next week on bank loans. A third dose of the Pfizer-BioNTech vaccine can dramatically reduce rates of COVID-related illness in people 60 and older. That's according to data from short-term studies in Israel. Confirmed infection rates were 11 times lower in the booster group compared with the group that got the standard 2 doses. Pfizer is expected to flag the data at a meeting with the US FDA on Friday. SpaceX has launched 4 civilians on a 3-day orbital excursion that could herald a new era in human spaceflight. The launch, dubbed Inspiration 4, took off from Kennedy Space Center in Florida aboard a SpaceX Falcon 9 rocket. It reached an orbiting height of more than 364 miles around 3 hours later. The passengers included a tech billionaire and 3 other US citizens without specialized astronaut training. Tom, Anna, do you think you'd qualify for that flight?
How many they got 4 up there, haven't they? 3-day trip.
3 days with no training.
Was it 6? No, I think they did 6 to 9 months training, didn't they?
No qualified astronaut.
No qualified astronaut.
That's what I meant. I'm sure
you'd have to commit a lot of time to it. But I mean, could you say no to a trip to space?
I could say no, yes, but that's my risk profile.
Okay, well, I'll take your spot then.
Thanks very much.
Tom's
going in my place.
Okay, natural gas. I don't know what powers these things, probably not natural gas, but power prices in Europe, along with natural gas, have continued their record-breaking run, and now it is raising fears about supply security this winter season. Let's get more then from Bloomberg's Danny Berger. Danny, how long does it seem like this crunch will persist?
Tom, unfortunately, the fundamentals really aren't great at this point. Energy is all about wind power. It's all about gas in Europe and the UK. And both of those are experiencing difficulties, whether it's really low wind output or low storage, low inventories when it comes to gas. Not to mention a fire that put down a key line between France and the UK, which National Grid says will have some degree of closure until March. So that suggests that this could last for some time. So those are the fundamentals. Let's look at prices, though, because we have seen a slight about face so far this morning. So this is Dutch front month futures. And just yesterday, we've seen, as this has been climbing all year, a record high for this price, quadrupling from the start of this year as we get that crunch. But just today, that has dropped 10%. And look, you can see it's still very elevated compared to history, but this could be traders saying the worst might be over.
Yeah, that's interesting. Just at the right-hand side of that chart you've got there, Danny, you can see that we are seeing a bit of a drop back in those gas prices today, but it's not really touching the sides because of the big ramp up that we've seen. How are European governments reacting to this? Because this is something that we've seen, some customers will be protected from some of this because of the way that prices are controlled in some European countries, and other governments are looking to take action to try and cushion the blow on consumers.
Yeah, absolutely, because so Spain, for example, they want to tax the windfall for a lot of these utility companies, share it with the consumers to help cap some of those bills. Italy, for example, they're looking at using state funding to directly cap some of the electricity and energy bills. But we are seeing, for example, no response from the UK government so far, which, of course, has been increasingly relying on renewable sources of energy like wind. Of course, another concern is what this means for inflation and how central banks could react to this.
Thanks very much, Danny. Danny Berger there with the latest on the gas markets. Hugh Gimber, JP Morgan Asset Management Global Market Strategist, is still with us. And Hugh, I suppose my big question here, given that you're pretty positive on European stocks right now, but these European stocks are going to face consumers who are having to pay higher gas bills or energy costs, and also companies that are maybe going to have to take this on their margin or try and pass that on. What is that going to do to the European corporate story, do you think?
Yeah, so for me, the question there is all about the extent to which governments are willing to step in and cushion the blow for consumers. Because it's really interesting to see that we know the costs involved in this energy transition are going to be enormous. This, I think, is a perfect example of the challenges when you're trying to shift the balance of the energy sources, the problems that we have effectively in not being able to ramp up renewable energy production quickly enough to offset the much more emission-intensive traditional energy sources. So there's this period of mismatch, which is really squeezing prices, and you've seen it in those charts. The rise has been exorbitant. So I would expect more intervention from governments to come. I think COP26 is going to serve as a really important anchor point later this year for a raft of policy announcements, particularly from governments, with new commitments to spend. I think they're seeing pressure from their electorate. They know that they need to take action on climate change. And they also know at the same time that they need to be locking in the success of the recovery so far. So I personally would expect that governments are going to continue to announce measures that try and protect the consumer, leaving those consumers in okay shape over the course of the winter. I don't think it derails the consumer story.
Okay, Hugh, so that's the response in order to protect the consumer. And then there's the corporate response in terms of spending and capex to make up for this gap. Aligned, you would have thought, with some government response as well on the fiscal front. Is there a way to position for that longer term story?
Yeah, so I think when you look across the energy sector, really it's going to be a case of seeing the gap between those that are part of the solution and those that are part of the problem continue to widen. So you're absolutely right to point out, COP26 is not only going to be a government story, there's a clear corporate angle to this as well. And I think people will want to be getting ahead of future regulation. They're not going to want to wait to be seeing their hands forced by governments. So within the European utility space, I think we see some really interesting examples of companies that are making very strong progress. Clearly, share prices have taken a bit of a knock over recent days in terms of the extent to which governments might cap their profitability in the short term, but these are long-term winners of this story. These issues are not going away anytime soon. And so I personally certainly wouldn't be looking at traditional energy and saying now's the time to buy, other than on a very, very tactical basis. Because the companies that you want to own over the medium term are the ones that are going to be part of that solution.
Hugh, thanks very much. Hugh Gimber, JP Morgan Asset Management Global Market Strategist. Thank you very much for joining us. We'll continue our analysis of the gas markets and power markets across Europe. We have a guest on that subject in around 10 minutes' time. Coming up here then, one last dance as Merkel and Macron meet for the last state visit in Paris. What's next for the Franco-German couple? We'll get the view from Paris next. This is Bloomberg.
From New York City.
We're here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headline.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Welcome back to the Open. We are 23 minutes into the European trading day this Thursday. The European markets are broadly positive, up close to 0.7%, leading and top of the pack. In terms of the country indexes, Italy, you're seeing gains of 0.9%, over the UK, gains of 0.4%, and in France, upside of about 52 points. Euro dollar, by the way, 117, crossing that 118 handle. Okay, Angela Merkel is in Paris today for her last state meeting with French President Emmanuel Macron as Chancellor. The two leaders will discuss current affairs, including the situation in Afghanistan, before a last dinner at the Élysée Palace. Joining us is our reporter in Paris, Caroline Conard. Caroline, how important then has Merkel been for the Axis, the Franco-German relationship?
She's been very important, the pillar of the French-German relationship over the past 16 years, going through 4 different French presidents facing the sovereign with Emmanuel Macron. Together, they also had to show a united voice of Europe against the former US President Donald Trump. So clearly, with the departure of Merkel, this is going to change politically in Europe, with Emmanuel Macron becoming the de facto leader of Europe, at least if he gets re-elected in France in 7 months' time. And economically, it's very important as well, because if you look at the different economic indicators for France and Germany, the French economy is actually rebounding faster than the German one. However, the debt levels of France are very high, and obviously that will be something to watch for with the next chancellor.
Just briefly then, Caroline, give us the latest in the French response, the French anger, it seems, over what's been quite a sudden US, UK, Australia nuclear sub-deal that seems to have left France in the cold. What's been the response?
It is the very big blow for the French military and defense industry. In fact, Jean-Yves Le Drian, the foreign minister, called on the radio this decision brutal and said that was unacceptable for a US ally and the Australian cooperation. So this was dubbed actually the contract of the century in 2016, when France was awarded this $66 billion contract for 12 submarines. This morning, the reaction from Naval Group, the company building this submarine, saying it's very regrettable. Thales, who owns 35% of Naval Group, had to issue a statement saying, don't worry, we maintain our financial targets. But clearly, this poses the question as well of the autonomy of the French and European defense industry.
Caroline Conard in Paris on the latest in that spat between France, the US and Australia. Okay, coming up, the energy crisis escalates. We'll get more on that. Stay with us. This is Bloomberg.
boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. 30 minutes into our European trading day, here are your top stories. Energy crisis. A fire knocks out part of a UK power cable. Analysts warn of blackouts as winter approaches. Car sales slump. European registrations dropped 18% in August from a year ago as the global chip shortage continues to squeeze output. And SpaceX sends civilians into orbit. Elon Musk's venture, enthusiasm for space travel. You'd have taken a seat in that
I'm just saving up my pennies.
Craft if you'd been able to. It seems the markets have an enthusiasm for travel and leisure stocks. The Ryanair story and other optimism coming from the sector this morning.
So the reopening trade is back in vogue, it seems, at least for now. UBS, by the way, also coming out and saying it's time to buy cyclicals and value. We're speaking to JP Morgan earlier. They're saying, look, we can look through to some extent, at least the Delta variant seems to be behind us. You still have the support from the central banks, and you do have that value play here in Europe. The Stocks Europe 600 is gaining currently 0.6%, 30 minutes into the session here in Europe. The UK and the FTSE 100 brushing off the concerns about the energy prices for the moment, at least, with that cable between the UK and France cut for now as a result of a fire. There was a cabinet reshuffle by Boris Johnson yesterday, gaining 0.4%. Over in Germany, you're seeing gains of 100 points at this stage. France and the CAC 40 up 0.7%. Caroline Conan was talking about the geopolitical spat there, looking ahead to the elections as well. But that is some months away. The ECB remains in focus for many European investors. The support there, a gradual pullback, is potentially what's on card as central bankers weigh up the inflation picture here. Let's move it on then to the sectors, how things are breaking down. Talking of inflation, it was energy that was top of the list yesterday, utilities at the bottom as a result of that equation. The two sides of that, travel and leisure, as Anna was saying, gaining 2% so far, clearly at the top of the list, followed by auto parts, despite that registration number of 18% in terms of a drop on the year for the month of August. Supply chain constraints still at play there, but some optimism for investors when it comes to autos. Top of the list, though, travel and leisure. Bottom, you're seeing basic resources down 0.7%. That is how markets are shaping up. 30 minutes into the trade here. Anna.
Okay, let's get more on the energy crisis then, get some analysis on where we are in this story. LimeJump's CEO, Catherine Newman, joins us now, and very good to speak to you, Catherine, a unit of Shell, I understand, managing renewable energy networks. Your thoughts on what's driving this gas price higher and whether you see it coming down anytime soon?
Morning. So LimeJump have obviously been looking at this with everybody else in the market. It's unprecedented times. So basically, we've got low gas coming into the UK. We have very low wind output on all the sort of renewable side of things. So obviously, that's a big drop. We've had a huge amount of outages across the board. We've got lots of nuclear out that wasn't planned. And down with the, obviously, the IFA fire yesterday, that's another 2 gigawatts that's disappeared from the UK market, driving prices even higher. So, on Tuesday, the day-ahead auctions were clearing at a high of £2,500 per megawatt hour. That is a record high. Previous day-ahead auction peaks were around the 1,500 mark at the beginning of this year. When you compare that to how the day-ahead market normally is across 2021, if you exclude September, that's £76 it normally clears at. So it's a really, really big push. Very, very aggressive market. In terms of whether we see it coming down, how we reverse this is obviously we needed to get windier, so we need a lot more wind power to come back on. We need to see lots of these plants come back online, and also IFA is now going to be out probably till at least the end of the month, so we've got 50% of that capacity gone to the end of the month. That's what National Grid said yesterday. Obviously that picture may change, but we're very reliant on importing power from Europe. Alongside, we need to get the gas supplies up again, but that's obviously a slightly more political situation.
Where does this leave the industrial sector? We've heard from the steel producers here in the UK warning about the impact on production and from other sectors across Europe. Are we expecting and should we brace ourselves for a more and a broader and a longer term industrial impact?
I think if we don't start to remedy the situation, we are going to be facing blackouts this winter. We have to be realistic. We need to get the gas stores up there. The gas stores are very low across Europe. It's not just impacting the UK, it's Europe as well. We obviously need to get as many generators back online as possible, and we need that increased wind power. But if things don't start to reverse soon, we will start seeing industry being turned off across the board.
So yeah, just give us a bit more detail on what that really means, because many people in Europe won't be all that familiar with living through blackouts, Catherine. Does that mean industry goes down for day after day or for hours at a time? And what does that mean for residential supplies?
So for residential supplies, we're obviously seeing increases in demand, and that's impacting some customers and some companies, sorry. We've been seeing a few companies going bust over the last few months, and I think we're going to see more to come across the board. In terms of industrial turn-offs, people get paid to turn off, so they're not basically using electricity at peak times of demand. So, it will impact people across the board. It's not something anyone wants. And I know, companies like ours will be doing as much as we possibly can to, use the battery storage that we have in the UK to turn on and basically meet these peaks in demands. It really does signal for the future. If we want to have a bigger renewables mix in the UK, which we all want. We want more wind, we want more solar. But to balance these drops in, when it's not sunny and it's not windy, we need flexible capacity that will deal with this. So this is why we need more battery storage in the UK. Line Jump is a battery-first company. We want to be able to produce and keep the national grid balanced at times like this and keep the power price down for everybody.
Okay, well, it's not happening at the moment, is it, Catherine? I mean, when you talk to your colleagues and others in your sector, is there a sense that additional investment and support is going to be coming through? Support from the government, but additional capex put to play by the private sector to try and close some of these gaps. Is that potentially some upside from this longer term?
Absolutely. So there is an unprecedented amount of battery development happening in the UK. We are leading, I think, the world now in terms of really focusing on getting more and more batteries into the network across the UK. I think, private industry is really supporting the build out of these. At the moment, we've just got over 1.1 gig of batteries in the UK. By 2030, we need 10 gigawatts of capacity available to balance the UK networks. And by 2050, I think the highest scenario is 30 gigawatts. So there's a huge amount of work that needs to be done to basically meet the renewable needs that we want. We want to have a 100% renewable network, but to do that, as you say, when it's not sunny and windy, you have to have that backup of batteries and longer term running batteries that are economically viable, green energy that we all want.
So we need more batteries, we need more storage, and we're certainly under average storage levels when it comes to gas supplies right now. Focusing in on the renewable side then, Catherine, as that's where your focus is predominantly. Wind power has been, not living up to previous strengths in this year. Do you have any sense of whether that rights itself? What are the long-term drivers that you can point to, or is it not possible to have a long-term view on wind?
It's really difficult in terms of weather forecasts. predicting the weather is a real art form. So, you know, I think we continue to work on our forecasting. Forecasting for renewables will become more and more important as we build that out. So the data science that's needed to support that and model that, the fundamentals across the board that impact that for weather are going to be really important to enable that we can keep a steady energy supply in the UK. So, you know, as we say, we want as much renewable energy. We live on an island. We are surrounded by wind farms. You know, we want to build more of those, but we obviously need to build additional things to support that. We need more solar. We need as much hydro as we possibly can. There are new technologies obviously being developed for wave and tidal power, making those as efficient as possible. If we can get a real mix of different technology types across the board, alongside using battery storage and gas peakers as we need to support the flexible times, that's what we can do to really drive forwards to a cleaner future.
Catherine, thanks very much. Catherine Newman joining us there, Lime Jump CEO, UK Renewable Energy Business. Thanks for giving us your thoughts this morning on rising energy prices. Let's go to Bloomberg First Word News update then. The top stories we're covering this morning. Here's Laura.
Thanks, Anna. Australia is joining a new Indo-Pacific security pact with the US and the UK that could pave the way for it to acquire nuclear-powered submarines. Leaders of the three nations announced the agreement, which will also increase cooperation on cybersecurity in a virtual meeting. France said the move halts a 2016 deal with shipbuilder Naval Group for up to 12 submarines for Australia. The Asian nation will now build the equipment itself. Prime Minister Boris Johnson has overhauled his cabinet, promoting a woman as the UK's first Conservative female Foreign Secretary. Brexit convert Liz Truss replaces Dominic Raab, who was criticised for his handling of the Afghanistan withdrawal. The reshuffle is expected to continue over the coming days as Johnson gets to grips with falling poll numbers and the continuing challenge of the pandemic. North Korea says the two ballistic missiles it test-fired this week were from a train, suggesting leader Kim Jong-un has added a new option for a strike against US allies in the region. Meanwhile, one of the top-ranked conservatives seeking to be South Korea's next president told Bloomberg the US is being reckless in its diplomacy with North Korea.
Americans view things in such a naive way. They thought that North Korea was like Europe, but they're not rational. They're like a monarchy from the feudal era.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Anna.
Okay, Laura Wright here in London with us. Coming up, supply chain chaos, how the...
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We are 43 minutes into the European trading day. European stocks are up around 0.6%. Top of the list in terms of your sectors, travel and leisure gaining 2.3%. Bottom of the list, it's the only sector that is currently trading in the red. Basic resources down 0.6%. Your euro dollar 117. Okay, let's get to today's big take story from Bloomberg, and it focuses on the chaos that is disrupting supply chains around the world. Logistics managers are battling the pandemic, a labor shortage, and shipping congestion. Quite the list, all while they face huge demand to get goods to your front door. Joining us now is Bloomberg's Brendan Murray, who heads up our trade coverage. Brendan, what is the state, as things stand, of these global supply chains? Why are there still problems? It's been a long time since the pandemic started. How have the shipping companies not been able to meet this demand?
Right, it remains a real mess. We saw a lot of congestion earlier this year at various ports and trying to feed into economies in the U.S. and in Europe. And we're seeing it flare up yet again. The latest count outside the port of Los Angeles has 61 ships waiting to enter the terminals there. That's 61 container ships full with tens of thousands of goods trying to get into the U.S. What we're seeing are companies placing a lot of panic orders, trying to build inventories before the holidays, and consumer demand continues to be strong. We're seeing that in the numbers coming in just this week.
And Brendan, good morning. How are companies navigating these difficulties? I mean, some of them are just having to live with it, I suppose. If your goods are stuck on one of those 61 container ships, is there much you can do?
Well, one of the logistics managers who I spoke to said it's just a constant negotiation trying to get these containers to move their goods from Asia or Mexico or wherever they might be shipping from. So they're responding by paying a lot of money for transportation, and if they can get it at all, there's just no capacity to move goods around the world right now. No extra capacity. It's all being used up. Ships are full, and ports cannot handle the volume that they're seeing.
Yeah, Brendan Murray, I know this story well. My stuff is still on a ship somewhere from China to the UK. 5 months, 6 months, who knows when it's going to arrive for now. It's rental furniture, it's keeping me going. Bloomberg's Brendan Murray, thank you very much for that big take. Well worth a read on the terminal and on line, of course, as well, Anna.
Yeah, I have some glass waiting to be delivered. That's somewhere
also important.
Stuck. Now, let's tell you what's coming up. SpaceX has launched 4 civilians on a 3-day orbital excursion that could herald a new era in human spaceflight. The launch, dubbed Inspiration 4, took off from Kennedy Space Center in Florida aboard a SpaceX Falcon 9 rocket. Ed Ludlow caught the action.
For SpaceX and the Inspiration 4 crew, this was a success from launch right until the moment that the Dragon capsule carrying them separated from the second stage booster and continued on its journey deeper into space. The crew have now reached a cruising circular orbit of 585 kilometers above the Earth. That is a record for SpaceX's Dragon capsule and spacecraft, and they will spend 3 days orbiting the Earth, conducting some scientific experiments, including looking at human physiology and human biology. One of the crew members, Chris Ambrosky, says he wants to play a ukulele while he's up there. NASA officials told me, actually, that SpaceX has agreed to share all of the data from this mission with NASA for free. They'll be gathering information like radiation levels at that distance from the Earth, what kind of space debris is out there, and on a successful return back to the coast of Florida for the capsule, NASA engineers will be able to inspect the heat shield on the underside of the Dragon capsule to basically see how it fared in an orbit at that distance. In fact, the Inspiration 4 crew will spend the most consecutive amount of time so far in a Dragon capsule. Of course, SpaceX has ferried NASA and other space agency astronauts to and from the International Space Station, but that's a 24-hour journey where they can get out on the other side. This all-civilian crew will spend 3 days. SpaceX say that this is a supply-constrained business. They say they have a backlog and a list of willing, paying customers who want to replicate this experience, but they have to do one successful attempt first. Remember, Jared Isaacman, the CEO of fintech company Shift4 Payments, is funding this whole expedition. He's the mission commander, but also its benefactor to the tune of a reported $200 million. The other members of the crew include Haley Arsenault, who survived cancer as a child and went on to be a physician's assistant at St. Jude, who are one of the other beneficiaries of this mission. The mission hopes to raise $200 million for St. Jude as a part of the profile of space that this mission is giving. In another example, Dr. Sian Proctor almost became an astronaut in 2009 through the NASA selection process, but she was not successful, and this has given her another avenue in order to get to space. But the plan right now is for them to orbit for 3 days and hopefully touch down off the coast of Florida sometime between Saturday afternoon and Sunday morning. Ed Ludlow, Bloomberg News in Cape Canaveral, Florida.
Ed Ludlow with all the tough gigs there. I'm sure he had lots of very interesting and important things to say, but all I'm focused on is the ukulele. I'm sure there's some really serious science behind why he needs to play a ukulele in space. I don't know what that is, but I'm sure it's very important.
We learned from you in the break that you're a cello player. So look, I know your name's not on the list yet, but if they touch down safely on the
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Reliability matters and affordability matters. And so costs, if costs go up, consumers don't like that. And if reliability goes down, it creates real problems. And so it's one of the reasons that we have to be very thoughtful about changing the mix. And I think what we're seeing in Europe right now is wind and solar are great, But if the sun's not shining or the wind's not blowing, you need to have, people still need electricity.
Okay, that was Mike Worth, Chevron CEO, warning the world should expect high energy prices for a while. Joining us now is Noor Al-Ali from our Markets Live team to talk about the gas story, but also what's happening over in Hong Kong. Let's kick off then with energy prices. Gas has come off just a little bit in today's session, relieving some of the pressures around the margins. As Anna was saying, though, in the context of this run-up, not a great deal. Do we expect this sell-off that we've seen today, the price pressure easing, to continue, or are higher prices here to stay?
Good morning, Tom. Thanks for having me. Well, realistically, the fundamentals are still there. And if we want to talk a little bit about classic trading partnerships and relationships here, you know, when higher volatility in the short term spikes, that leads to more risks. And sometimes what traders tend to do, because that really points to either the end of the highs or the lows coming in, they pull back on those trades just because they're expecting those trades to come off a little bit. But the fundamentals are still there, at least for European gas in the cold winter that's ahead.
Looking at European equity markets, we're making decent gains, actually, Noor, this morning, maybe playing catch-up a little with what the US did late in its day. The handover from Asia was negative, though, and Hong Kong stocks, once again, in focus, Noor. What caught your eye?
It's very much still an idiosyncratic story that's pertaining to China there and what's happening under the common prosperity umbrella, as we've all said and spoken about recently. And when you tie in the property market in there, especially with Evergrande, you know, a company as large as that, expecting bailouts from the government, but the government says, you know what, we're not doing this, you're on your own. And that's exactly what you're seeing here. Time and time again, the Chinese government has made it clear what their priorities are, and it seems that they're sticking to that.
It's, as Anna was saying, the read-through to Europe and the European session from Asia hasn't really gone hand in hand. Catch up with the US, maybe. What are the next catalysts that the markets are looking for, Noor?
Well, you know, I want to tell you it's the FOMC next week, but I'm afraid that might not be as exciting as a lot of us want it to be. I mean, realistically right now, we've had a lower inflation print come out from the U.S., which gives the Fed more time to talk about tapering. Now, realistically, what we really need, or what the market really needs, is some direction when that tapering is going to come in, more clarity on that. So whether it's the ECB or the Fed or pretty much any central banker out there coming out, I think the market is really keen on some form of direction.
Do you think, Noor, the markets have listened to central bankers who've been trying to detach tapering from interest rate rises, or do you think market participants are saying, no, they're linked?
Well, look, realistically, if you want to look at the 10-year bond, and that's the generic one from the U.S., that really emphasizes the relationship with the policymakers and the markets. And so far, you've seen it pretty much fluctuate mid-range throughout from mid-July as well. And the market is still believing the Fed when it says inflation is transitory. So I think realistically what's happening here is that they're just waiting on when the tapering announcement is going to start. Because if you look at 2013, once you see that timeline, it took about 8 to 10 months for that to wrap up until the rates decision came in. And so realistically here, once tapering does begin, that's when we're going to start talking about rates.
Noor, thanks so much. Thanks for joining us. Noor Al-Ali from our Markets Live team. A comprehensive wrap there of what's been driving markets over the past 24 hours. Of course, we're seeing European equity markets catching up a little bit with what's been going on over in the United States. But Hong Kong was weak, Tom, overnight. But that's failing to cut through into the European session. Yeah, currently your euro dollar as well is weaker by about 0.3%. Noor was talking about the 10-year. You've seen some yield flattening there. 130 currently across the spread. That is it for European market open. Surveillance Early Edition is up next. This is Bloomberg.
look at China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper, and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now. And you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, you know, we see the evidence of that strong consumer.
The future of each of our nations, and indeed the world, depends on a free and open Indo-Pacific.
We intend to build these submarines in Adelaide, Australia, in close cooperation with the United Kingdom and the United States.
We have to strengthen the EU's competitive position.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Energy crisis. Gas prices continue to soar amid supply shortages. Later on in the program, we speak to the chief executive of the energy infrastructure operator, Snap. Scholz braces for a Bundestag grilling, while the front-runner to become Germany's next chancellor will answer questions about the police raid on his finance ministry. And in an effort to counter China, the US, the UK, and Australia announce a historic security pact. France underscores the need for European strategic autonomy. Now, first thing is first, we have a packed show for you because we have a lot of news. But to the markets, and you can see we're seeing a little bit of a lift in these stocks here in Europe, gaining some 0.6%. Now, this is after we saw 6 consecutive drops in the S&P over in the US. That was broken yesterday. We're back at the records we saw in August. Futures in the US pretty much unchanged. The focus also a lot on crude oil. We'll have a big commodity check because there are concerns about the economy. There are, of course, concerns about what's happening in China with all of the regulatory crackdown. If we look at the individual indices, he's in Europe, but they tell us a better story of some of the technology stocks. For example, the UK technology and commodity rich gaining some 0.4%. The CAC 40, we'll spend a lot of time actually talking about France and the French markets because of the defense story. And then you can see the DAX gaining some 0.6%. The groups that are moving the most, I'm sure we're going to see travel and leisure, chemicals and energy. Again, this is a reflation, of course, a story to do with the economy. And then there's only one group that's on the lower side, basic resources. Now, let's take a broader look at the markets. Eddie van der Veld from our Bloomberg Markets live team joins us. So, Eddie, thank you so much for joining us on a big day for commodities. I know you've been watching commodities a lot. What exactly is
very heavily focused on? But I mean, part of this story in Europe is there's 2 elements here. Number one, European natural gas storage facilities are still very low. We're talking about 70%, whereas at this point in the year, you were expecting them to be filled up very near the top. That's still coming. But the other problem is that the wind just hasn't blown. If you'll excuse me for a moment, this is sort of the perfect storm for European energy prices, but in all the wrong places. We'd had storms in the US, which has affected natural gas or LNG flows, but the wind hasn't blown in Europe, and that's put pressure on electricity generation, which then meant we rely more on our nat gas supplies, which has pushed prices significantly higher across the board.
I mean, Eddie, I know this is a story, but I have to say, thinking that the UK doesn't have enough wind is something that like literally blows my mind. Talk to me about crypto. So we also heard from Ray Dalio saying instead of cash, you should go into crypto.
Yeah, really interesting. I mean, Ray Dalio has a little bit of a problem here in that, his risk parity strategy relies on the lower correlation between stocks and bonds. And in this world of TINA, where there is no alternative, where bond yields are already so low that people are being pushed into stocks, there could very well be a case that, as bonds sell off, stocks sell off too, if we see a tapering situation. And that makes a risk parity strategy and even the 60-40 strategy very risky. And so he's looking for diversification. And if there's nothing else that Bitcoin offers, it does offer diversification.
So, Eddie, talk to me a little bit about some of the regulation that could affect stable coins and therefore could, I guess, infect the whole cryptocurrencies.
I think this is the big risk to the cryptocurrency space at the moment. Regulation as a whole, probably good for cryptocurrencies because it means that there can be greater adoption. But at the moment, stablecoins is part of the backbone of the cryptocurrency space. And really what the regulators here are worried about is that a lot of these, like Tether and others, Tether is a 62 billion asset class. And basically what the regulators are worried about is that a lot of what it holds is money market instruments. So if there's a run on Tether, you could see a sell-off in these money market instruments, which could have a spill-off into the wider market. So there could be a feedback loop here, and that's why regulators are really worried about stablecoins.
Eddie, thank you so much. This is a good day for Eddie van der Waal to talk about his two passions, commodities and crypto, from our Markets Live team. Now, natural gas, as Eddie was saying, power prices in Europe have continued their record-breaking run, and now it's really raising fears about supply security this winter season. In an interview with Bloomberg, the Chevron chief executive warned of higher energy prices and supply crunches.
Reliability matters, real problems. And so it's one of the reasons that we have to be very thoughtful about changing the mix. And I think what we're seeing in Europe right now is wind and solar are great, but if the sun's not shining or the wind's not blowing, you need to have, people still need electricity.
Mike Worth there, the chief executive of the world's second largest oil major, Chevron. Now let's get more from Bloomberg's Danny Berger. Danny, first of all, it's great to have you back. How long does it seem that this crunch will actually persist for?
Yeah, the wind really being taken out of their sails. Another wind pun for you this morning.
Well, we're on a roll.
We are on a roll. The fundamentals, Francine, really do not look great. Eddie was talking about some of this. We also heard from Chevron there. Wind, of course, is frankly running out of time to build up those stockpiles before it gets cold. So that's the fundamentals. Here are prices front month. The worst could be over.
So, Danny, how are European governments actually reacting to this? I mean, we hear some of them saying, well, we need to subsidize. I mean, this is a huge political problem for them, especially if they're going through elections.
Oh, absolutely, because this is a huge economic consequence if it hits the consumers. For example, Spain looking at limiting the windfall that these power utility companies can have, capping the bills. Italy, Mario Draghi saying that they are doing a whatever it takes approach using public funds. Of course, though, beyond governments, perhaps what investors are overlooking is the response from central bank governors. And this is something that Ben Emmons over at Global Medley cites, saying that, look, inflation data in the UK and Europe, it's already showing the impact of power prices, and that may have implications for decisions from the Bank of England and the ECB, Francine.
Danny, thank you so much. Dan Berger there with the very latest on some of these higher gas prices. Now, later in the program, we'll also be speaking to the head of one of Europe's biggest energy infrastructure companies. He's now focused on hydrogen and renewables. Our conversation with SNAM's Marco Alverà. In this hour, you can send your questions to IB plus TV Go, or you can tweet me at Flacqua. Now, let's turn to the German election. The Social Democrat frontrunner, Olaf Scholz, will answer questions about last week's raid on the finance ministry in a special hearing in the Bundestag on Monday, less than a week before the national vote. Well, joining us now for more is Bloomberg's Maria Tadeo. Maria, first of all, I mean, it's kind of crazy that you have an election that's so important, and at the same time, 10 days before, you have someone who's just trying to answer these questions about what happened with that raid on the finance ministry last week.
And a week before the election, Francine. And, you know, to some extent, the idea here is that, you know, he needs to answer some very tough questions on what happened here. But the timing is very funny. And for the CDU, this is about saying, as a finance minister, you have not been a competent operator. The problem is, Francine, that for many Germans, this sounds like desperation. The timing is coming before the election. The CDU can take continues with this red scare. It's a red-green government, and coming almost in a way that just looks very desperate to try to prop up government.
But there was a raid, right? So there's a raid, so that's undeniable, and we need to get to the bottom of what happened exactly.
Yeah, but the timing of that raid, for many in Germany, and I was in Berlin up 2 days ago, many felt that this is something that was done to mess with olive shelves. The timing of this is not because we want investigations or we want the answers to questions. This was about making olive shelves look bad.
Okay, that's quite a big allegation. Maria, talk to us about defense.
Yes, well, today we had also an overnight story coming from Australia where we were sleeping. They canceled a big contract from the French from submarines, and they're very angry about this. And Francine, the story to me is fascinating, has so many different layers to it. One is, of course, the French have lost out the contract. It's going to the United States, it's going to the United Kingdom. The foreign minister today on the radio, using language that to me is extraordinary, was saying this is a stab in the back to the French, but also to Europe. So I would not be surprised if the European Union decides to maybe turn on the heat on the trade front again.
Maria, thanks so much. Maria Tadeo there on those two important stories. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Later on in the program, we'll also discuss London Fashion Week, kicking off the autumn-winter season with the chair of the British Fashion Council. Now, more than the season, it's really a talk about visas, Brexit and shortages. We'll also talk energy prices with the chief executive of one of Europe's biggest energy infrastructure companies. SNAM's Marco Alverà joins us this hour. Again, if you have any questions for any of our guests, IB plus TV Go. This is Bloomberg.
About your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Speaks on monetary policy and international economic situation at a press conference. We also get U.S. weekly jobless claims and retail sales, which would play into the U.S. inflation debate. And finally, the German Chancellor Angela Merkel meets the French President Emmanuel Macron. The two will discuss current issues in Afghanistan and Europe. Now, stocks rising in Europe. U.S. futures steady after the S&P 500 posted the biggest jump since August overnight. Energy shares rising as surging costs remain in focus. Now let's also look at Asia, shares falling there. Of course, it's all about the debt crisis at China Evergrande, hurting sentiment, intensifying concern over the impact of a default by Evergrande is actually rippling through the nation's financial markets. Now joining us to talk about all of this is Amundi's Global Head of Research, Monica Defend, to talk all things markets. Well, Monica, as always, thank you so much for joining us. So I don't know whether the markets for the moment have parked the inflation debate because of the CPI number we had this week and are worried more about China and valuation, or whether actually inflation is still the #1 concern dictating what central banks do that's mispriced in the markets.
Thank you, Francine. I think that over August, the market switched from the narrative of too much inflation to the narrative of not enough growth. And this is what has been dominating global markets. On inflation in particular, the number in the US was in line with our expectation, plateauing. And the good news is that this is going to a certain extent weaken the pressure on the Federal Reserve. The market today will be looking at the retail sales because really the growth concern are material. We do expect the growth to moderate after the bounce back. A moderation is on the line. The two, higher inflation and lower growth, can be the challenges in the medium term.
Monica, give me a sense then of what you think could be mispriced. So when you look at your research, are there things that the market misunderstand that you have to spend a bit more time on? Is it China or is it actually, something else like consumer behavior in an inflationary environment?
I think that the interest rates still remain the conundrum because we know that interest rates have been moving far away from the traditional inflation growth pattern, and they've been biased by the influence of the liquidity flush that the central banks have been injecting. So this is where I see most of our concern. When it goes to China, a big transition is in place towards this modern socialist society, with the idea of having in the short term growth that is more sustainable and distributed in terms of wealth to people at a time where they do not want any turmoil in the financial market. So the situation is quite complicated into China. They continue with the regulation. This will continue, so we remain constructive of China, but on those sectors that are more insulated from the regulation. And when it goes to the latest news on the market, we think this is part of the game where the government has to play between default or intervention.
So if you look at COVID fears, and I guess the risks of variations, mutants, or booster shots not doing their work, what is priced in the markets right now?
The market is pricing a kind of Goldilocks to come, still growth and inflation plateauing. This is what the market is currently pricing. We are a bit more cautious on that, meaning that in terms of overall equity exposure, we are neutral, preferring the relative space to temper the risk budget of the portfolio.
Monica, give me a sense of how investors should play China. So you call this, they're trying to build a modern socialist country. At what point should we worry that what they're trying to do in China could actually hurt global growth?
Well, the global growth spillover is something that we really have to look. But after the pandemic, we have seen this progressive deglobalization and look for self-independency, like in Europe. This is one of the clear strategy that state members have in place. This might insulate some of the spillover from Chinese slowdown. In terms of China, they have a bond market that is offering nice carry when you go to the IG emission, for example, while on the equity space, being in the biotech, clean energy sectors might be a good idea.
Monica, I don't know whether you're into crypto or you're looking at gold right now, but is there an outlier call that you're spending more time thinking about, again, your global research?
Definitely, we cannot ignore the crypto wave, though we remain skeptical. And if I have to think to the allocation for a reference portfolio on an institutional client, I would not consider. We are not considering crypto, but we are looking at digital. While gold, definitely, a little brick of gold in our portfolios is something that is dominating the allocation in the long term. We've been long gold since a while. It goes when growth might disappoint, when inflation might be an issue. So a little bit of gold is always worth having.
Monica, thanks so much as always. Amundi's head of global research, Monica Defend, joining us today on the markets. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Later on in the program, we talk London Fashion Week, and we talk luxury spending, especially as the Chinese are not in the UK at the moment. It kicks off with the autumn-winter season. We'll be talking to the chair of the British Fashion Council, Stéphanie Fer. Now, we'll also discuss energy prices with the chief executive of one of Europe's biggest energy infrastructure companies, Snam's Marco Alverà, joins us shortly. If you have any questions for any of our guests, IB plus TV Go, or you just tweet me at Flacqua or tweet at Bloomberg TV. This is Bloomberg.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
In order to make the best team win, we need to have a level playing field on the rules and regulations on a global scale. That's really important on the whole climate matter.
The carbon footprint doesn't only happen within the four walls of a car manufacturer. It actually, it's created across the supply chain. And this is why, and this is also a unique opportunity for Europe to create strong B2B platforms.
We should go in the direction to enable our industry to develop the solutions that enable countries worldwide to become climate neutral. That should be the agenda.
At the end of the day, this way is not all about risk, but it could be an opportunity for Germany and for Europe. And therefore, whenever we talk about environment, let's also talk about the S part, because the one does not go without the other.
Well, those were some of the highlights from yesterday's Germany election special, the chief executive briefing. It would also replay on Bloomberg TV this Sunday at 4 p.m. I also urge everyone, and I'll push it on social media, to go and read a fantastic quick take to try and understand why Angela Merkel's exit from Germany also matters for Europe and the rest of the world. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. Australia is joining a new Indo-Pacific security pact with the US and the UK that could pave the way for it to acquire nuclear-powered submarines. Leaders of the three nations announced the agreement, which will also increase cooperation on cybersecurity in a virtual meeting. France said the move halts a 2016 deal with shipbuilder Naval Group for up to 12 submarines for Australia. The Asian nation will now build the equipment itself. Prime Minister Boris Johnson has overhauled his cabinet, promoting a woman as the UK's first Conservative female Foreign Secretary. Brexit convert Liz Truss replaces Dominic Raab, who was criticised for his handling of the Afghanistan withdrawal. The reshuffle is expected to continue over the coming days as Johnson gets to grips with falling poll numbers and the continuing challenge of the pandemic. A third dose of the Pfizer-BioNTech vaccine can dramatically reduce rates of COVID-related illness in people 60 and older. That's according to data from a short-term study in Israel. Confirmed infection rates were 11 times lower in the booster group compared with the group that got the 2 standard doses. Pfizer is expected to flag the data at a meeting with the US FDA on Friday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura Wright. Coming up next, we talk about renewables, the energy crisis, and hydrogen. We speak to the SNAM chief executive. This is Bloomberg.
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
every Friday with 30 minutes dedicated to fixed income. I'm Jonathan Ferro. This is Bloomberg Real Yield.
Energy crisis. Gas prices continue to soar amid supply shortages. Later on in the program, we speak to the chief executive of energy infrastructure operator Snam. Scholz braces for a Bundestag grilling, while the front-runner to become Germany's next chancellor will answer questions about the police raid on his finance ministry. And in an effort to counter China, the US, the UK and Australia announced a historic security pact, while France, not too happy about it, underscoring the need for a European strategic autonomy. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, natural gas and energy prices, you should know it by now, in Europe have continued their record-breaking run. And that's now raising fears about supply security this winter season. Let's get more from our Danny Berger. Danny, I mean, it has been actually pretty shocking following the price. What exactly is going on?
Yeah, record after record. It has a lot to do with both low wind output as well as gas inventories. These are really the two key components when we're talking about energy in Europe. Without those, as I said, we've seen prices start to skyrocket. So this is what it looks like in terms of Dutch front-end energy futures. This is natural gas. And you can see that just yesterday, they hit an all-time high. This is quadruple of what it was to start the year. Yes, it's eased off somewhat, but in the grand scheme of things, these prices are still extremely elevated. And it's really the case throughout the UK and all of Europe as well. Let me show you what German prices look like compared to the average. And Europe is really running out of time to stockpile before it starts to get cold. We've seen governments throughout Europe respond to this, wanting to ease the burden that consumers might face because of the potential economic implications. As Goldman says, that industry might face blackouts, Francine.
Danny, thanks so much. Our Danny Berger there with the very latest on some of these shocks to the system. Well, joining us to discuss energy prices is Marco Alvera. He is chief executive of Snam, one of Europe's largest energy infrastructure companies, also author of the new book on a hydrogen revolution, a blueprint for the future of clean energy. So, Marco, thank you so much for joining us. Look, you came because there's this book. It's a great book, and I want to talk about renewables. But actually, there's so much news in terms of gas prices, and you're really an energy expert. You also gave me, I think it's twice in the last 4 years, which I try and study, right, a pipeline. So this is, like, energy has to come in and out of Europe. If the UK, it depends on where it comes from. I mean, why is it so difficult to keep these gas prices under control right now?
Well, what happened is really a perfect storm. We've been used to regional gas prices. So the US had its own prices, Asia had its prices, and Europe had its own prices. With the rise of LNG and the decline of UK production and Dutch production, Europe is now fully reliant on LNG. So the price in Europe is determined essentially by what happens in China. People have underestimated the rise of Chinese demand. China has stopped using coal for cooking, for example. It's made it mandatory to use gas. So big coal to gas switch in China is driving up demand. A lot of maintenance during COVID, and prices have just shot up.
But Marco, how could we have let this happen? I remember 5-6 years ago speaking to you about this, that our number one concern as Europe was supplying energy. Energy security was number one on the list. Is there anything that governments can do now to reverse that?
Now, government needs to invest in storage. We have a lot of oil storage that we don't really use, nor we really need. We don't have in many countries storage. So the key issue for this winter is that we're not able to fill up the storages fully. That's the key determinant. That's where governments can intervene to regulate storage, to make it mandatory for people to fill up storage. Some countries like Italy, where we have obligations to fill up storage tanks are full, which is good.
I mean, this is a huge political problem, right? And here in the UK, so the UK is hosting in Glasgow COP26, and at the same time, they've had to fire up the coal plants to try and make up for the shortage also because of the lack of wind. I mean, what does it mean for renewables?
So renewable is a medium to longer term play. The shortage, I think, is really going to just affect this winter because supply will build up. Renewables are much cheaper than the prices we've just seen a second ago. So the bottom line is solar energy in a sunny place costs 10, where gas today costs 70 euros per megawatt hour. So medium long-term renewables will address and fix all this because they are predictable when it comes to sun, and they're manageable when it comes to wind. But for now, we need to worry about this winter. Hopefully it's not going to be too cold. If it is cold, we're going to see demand adjust. Some people are already shutting down production. If you're making fertilizers, for example, the prices are already too high. So I'm not worried about blackouts, but I'm worried about the competitiveness of certain sectors that are really dependent on energy prices to succeed.
Talk about renewables and hydrogen, which is what your brilliant book is about, and it just makes you smarter on something that not a lot of people trust or understand, to be honest. What price level do we need? So does it need to be cheaper than oil, or does it need to be cheaper than coal to have wider adoption?
This is a key point. Our pledge, we're working with 7 companies, we're bringing it to the G20 and to COP26 in Milan and in Glasgow, is to make green hydrogen made from solar or wind energy cheaper than oil in 5 years' time. And that will really address a lot of the pricing issues around the world, because that will act as a ceiling for pricing. So that's $2 a kilo, 50 euros a megawatt hour. And that, by the way, is cheaper than oil today. In 10 years' time, the Department of Energy in the US says we can get to $1 a kilo, or $25 a megawatt hour, which is cheaper than coal. So green hydrogen cheaper than coal is the way to get China and India off new coal plants.
I have viewer questions, which I want to get to in a second, but I also want to ask you, Marco, about some of the components that maybe we're missing. So if you speak to the Glencores of this world, if you speak to a lot of the commodity producers, they say, look, if you're going to change into renewables, including hydrogen, you need some of the rare earths. You need some of the things that actually are very difficult to find. Is there going to be a shortage of that will slow the transition to green?
The shortage will slow certain technologies. We're one of the leaders investing in electrolyzer technology. It's what you need to split up water and create hydrogen. And the challenge is to make these plants with cheaper material, with different material. There's many technological alternatives out there. So I wouldn't put all the eggs in one basket and say there's a massive rare earth crisis. There's going to be specific crises for lithium, for specific products. Generally speaking, I think technology is going to succeed, and we're going to see costs coming down much faster than people expect.
Mark, the other big question is, of course, the Joe Biden infrastructure plan. What does that mean for hydrogen? And there's not a real difference between blue hydrogen, which is not as good as the green hydrogen, because the blue use fossil fuels. I mean, how do you work around that?
So blue is a transition issue. We need to make blue almost carbon-free. So you can make dirty blue. We need to make clean blue. Right. The infrastructure is there. The map you showed is a gas pipeline. Yeah. We can use exactly that same infrastructure to move hydrogen around. So you have pipes there going into North Africa. We can produce
a lot of pipes.
So I say the North Sea is like the Disneyland of hydrogen. Look at all those pipes up there in the North Sea. A lot of wind, a lot of pipes, a lot of cheap hydrogen coming into Scotland, coming into the UK.
But what needs to happen for it to turn into hydrogen? So political support.
Yeah, but costs are coming down fast enough that the amount of political subsidy, political support is little. So we have to turn it on its head. The energy transition is not about costs and taxes. It's about creating the biggest business opportunity we've seen. This is trillions of dollars of infrastructure that's going to deliver cheaper and more reliable energy than we have today.
Okay, I love it when viewers actually get excited about our interviews as much as I do. And thank you, Mr. or Miss Viewer, writing in. This is just the beginning of fossil fuel companies cutting investments. Marco, what would happen to energy security and fuel prices as the transition moves forward and investments continue to lag?
It's going to be boom and bust. We've seen this before. When investments stop and demand rises, like we're seeing on these charts this morning, prices just skyrocket. So we need investments to continue for the transition. But again, the wind and solar costs are coming down so fast that we need to really continue to invest for another 4 or 5 years in conventional infrastructure. And then in 5 years, we'll deliver hydrogen cheaper than oil.
Do you remember, and I think you were talking about it, do you remember when you were skeptical about hydrogen and suddenly thought, actually, no, there's something there?
I was so skeptical because I was skeptical that solar costs would come down so fast. So we were living in a world where solar energy was at $1,000 a megawatt hour and gas was at 20. Now we have gas at 60 and solar at 10. So it's really a paradigm change that's really going to accelerate a lot of this transition.
Marco, we also had this report of, if you're a European government, if you're an Angela Merkel, or maybe her successor, but, if you're Emmanuel Macron or Mario Draghi, you're thinking, right, my energy prices are going through the roof. I need to make sure that people can still afford their living goods. I need to give subsidies or something like that. Does that impact actually the transition to renewables? Because suddenly, the prices could fall, or as a consumer, my price could fall of what I pay.
Yeah, so ultimately prices are cheaper, so it will help energy poverty. But we need to address energy poverty head on. We can't have a solution to fix it all. We need to figure out those families that are in greater need and those companies that are in greater need and have very focused incentives for them. Energy poverty means two things. Either you're not heating your home enough because you can't afford it, or you're spending way too much money on heating and you're suffering from shortages elsewhere. So we need to support the weaker families and the weaker companies as opposed to trying to figure out fix all measures, because there's nothing governments can do when oil is at 100 or was at 150 or gas is at 70. It's just too big for taxes to kind of fix it for everyone.
Okay, Marco, thank you so much. Marco Alvarado there, Chief Executive of SNAM, came with a book, but also with a map. But his book, The Hydrogen Revolution, it's a good read. It just makes you smarter on stuff that not a lot of people know about. Now, coming up, we talk about luxury and fashion making a partial return to its former physical glory. The concern, of course, is labor shortage. It's not only about not having enough tourists from China coming in the UK, but it's also about taxes, bringing products and goods in and out of the country. We'll talk about the fashion industry as models begin showcasing the best in British design on the catwalks from tomorrow. We'll be speaking to the chair of the British Fashion Council next. This is Bloomberg.
如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港易嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, the world's fashionistas are descending on the UK capital for London Fashion Week, which opens tomorrow. It's an opportunity for top established designers to showcase their work alongside some of the very best emerging British talents. Now, for more on all of this, we're joined by Stephanie Fair, the chair of the British Fashion Council. Stephanie, as always, so good to speak to you. I know it's like a crazy busy week for you. The focus, of course, is on the business of fashion. How has the pandemic changed the way you look at what needs to be done, whether it's sustainability or circularity or even the impact of Brexit?
Good morning, Francine. Thank you. Yes, it is a busy week and we're looking forward to Fashion Week coming back. We have over 130 designers and it is a hybrid model. What the last 18 months have shown is that actually there is a value in having a very strong digital platform, which we, of course, at the BFC, British Fashion Council, were the first to pivot. to digital. So it's wonderful. It's a platform for business, but also a very important cultural show of the strength of the UK economy. But of course, some of the challenges that you've mentioned are not helping us. So I think we have short and medium term challenges, which we've discussed before, the challenges around COVID and what will happen when the furlough program is sunset, and then of course, challenges around Brexit. And those we've mentioned before, it's about import and export and all of the customs paperwork required, but it's also, and we're seeing it keenly, skills shortages in terms of highly skilled professions. And this is, the fashion industry is so multifaceted. It's not just about models or image makers, it's about manufacturers, textile, seamstresses. So these are some of the shorter term challenges.
Stephanie, a lot of the focus, and I know you were, leading the charge on this, is on sustainability, is on circularity, and actually what the fashion world, the luxury world can do to maybe minimize and help the green transition. What are we talking about in terms of, the steps that will really be taken? Like, is it too soon to say how it will transform the fashion world?
No, I think it really is important. And I think on the eve of COP26, this is absolutely a time to shine the light on the contribution to the fashion industry, not only from a negative perspective, we contribute 4 to 5% in greenhouse gas emissions, but also the opportunity that if we fix it, we can really move the needle in our race to net zero and the government's goals to their 2030 and 2050 net zero goals. So in practice, what does that mean? I'm delighted that this week we're launching our Circular Fashion Ecosystem Report, which was one of the first projects that we've launched as part of our Institute of Positive Fashion. And this is really looking at a blueprint for a circular fashion economy in the UK, because ultimately the only way to fix this is to move from a linear fashion economy where you essentially buy something and then there's no real end of life, to a circular one where we're being smart about the fabrics we use, we reuse it, we minimize waste, we minimize the waste in production, and ultimately new business models get created. And what's very important is this is about bringing together stakeholders, the consumer, industry, government, and to see this not as risk management, but actually as an opportunity for growth. And that's what's encouraging.
But Stephanie, how hard is it to go through this really, frankly, massive transition at a time where, you've also, or your members have had to adapt to sell online, so because people didn't go into shop, the UK still suffering from the lack of outside tourists, especially from China?
It is hard to go for this transition, which is why no company can do this alone and no individual business can do this alone. We've got our very large businesses, Burberry and Stella McCartney, for example, who are making great strides, but even they have to be able to share the knowledge and be able to benefit from an industrial transformation program that the government can encourage. So it is difficult, but ultimately we need that blueprint so that it becomes economically more viable to become a more sustainable business. And interestingly, if you see some of the younger brands and emerging brands, they all have circularity built into their fashion model. They're seeing that the future from a consumer standpoint, but also for those who are following sort of the world of finance, money and impact investment is flowing into businesses that are future-proofing themselves.
Stephanie, how difficult is it, for the moment, for some of your designers and your, luxury companies to transition also in the way we shop? Like, not a lot of people still wear suits. Not a lot of people have, events in the evening. How, I don't know whether it's been the most difficult part for a lot of these designers, or whether it was just all around closing shops and going to online.
So I think it's the difference between, has there been a drop in demand, or has there been sort of a mix, a change in the way people shop? I think a bit of both. The good news is we think demand is recovering, but there's been a paradigm shift to online. So the difficulty that you're pointing at is probably the businesses that haven't really embraced the digital revolution. And there are still some, and who haven't been able to connect directly with their consumers. But we are seeing that coming back. We're seeing physical events come back. We're seeing people wanting to shop for occasions. So that's incredibly helpful. And it is a resilient economy. And a new Oxford economics study that's just come out for across the retail, so it does include beauty, states that actually we could surpass in terms of recovery and grow 20%, clearly from a lower base. But it is important actually to think about that growth in the context of building back better.
Stephanie, thanks so much. Stephanie Fair there, the chair of the British Fashion Council, joining us this morning. Now, let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Anti-government marchers in El Salvador have been protesting government moves to consolidate power and against the adoption of Bitcoin as a legal tender. Several thousand people marched in the country's capital, San Salvador. Demonstrations were largely peaceful, though one group smashed windows and set fire to a Bitcoin ATM kiosk. European car sales slumped in August, dropping 18%, even against last year's pandemic-depressed numbers. The European Automobile Manufacturers Association says total sales are now up just 13% for the year as output gets squeezed by the global chip shortage. The bosses of VW, Daimler and BMW have all warned the supply crunch will continue into next year. SpaceX has launched 4 civilians on a 3-day orbital excursion that could herald a new era in human spaceflight. The launch, dubbed Inspiration 4, took off from Kennedy Space Center in Florida aboard a SpaceX Falcon 9 rocket. It reached an orbiting height of more than 364 miles around 3 hours later. The passengers included a tech billionaire and 3 other U.S. citizens without specialized astronaut training. Francine, do you think you'd qualify for a mission?
I mean, maybe if I think if I was a billionaire, I would seriously think about going into space. Otherwise, doing the hard work that goes with it without, the money to have my own private capsule. No, Laura, you?
It doesn't look that comfortable, I must say, but I hope that their positions changed once they were in orbit.
Yeah, but what conversations you would have actually at dinner parties afterwards? Maybe it's worth just for that. You'd entertain all your friends for decades to come. That's your Bloomberg Business Flash with Laura Wright. Thank you, Laura. Now, coming up, the new security pact between Australia, the UK, and the US brings a rift with France. So we'll get into the issues next. This is Bloomberg.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition, and I'm Francine Lacqua here in London. Now, Australia is joining a new Indo-Pacific security partnership with the US and the UK that will allow it to acquire nuclear-powered submarines. It comes as China has been expanding its military presence. Now, the news also sparked a rift with France over supplying the vessels. Well, joining us now for more on all of this is Caroline Conan from Paris. Caroline, great to speak to you. So the French are furious, really, about the deal. Talk us through their reasoning.
Yes, technically this contract was dubbed 5 years ago the contract of the century. $66 billion for 12 nuclear submarines that were going to be built in Normandy and the west of France by this group called Naval Group. Thales, the French defense company, actually owned 35%. They had to issue a statement this morning saying, don't worry, we are maintaining our financial targets despite the withdrawal of Australia for this contract. The foreign Minister of France, Jean-Yves Le Drian, said he was very angry. There was trust betrayal from Australia. And in fact, he was also angry at the US, calling Biden's declaration yesterday brutal and saying there was like a stab in the back for France. In fact, this contract was supposed to employ hundreds of French people, but also Australians, because it had suppliers in Australia. In fact, they just signed a supply contract for $1 billion for Australia for this French contract. Yeah. So clearly, this is a blow for French diplomacy, the French industry, and underlines the need for more autonomy of the French and European defense industry, according to the government here.
Caroline, in 20 seconds, also Angela Merkel meeting Emmanuel Macron in Paris.
Yeah, and she's lived through 4 different French presidents, 16 years as Chancellor, so clearly this is going to be the last dinner at the Élysée Palace for Angela Merkel, and perhaps after her departure, the shift to become the de facto European leader will go to Emmanuel Macron, that at least if he gets re-elected in 7 months' time.
Caroline, thanks so much. Caroline Conan there, really speaking to the changing face of Europe because of various elections, Germany and then France. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of London. He's in London. Watch out, London. Kaylee Lyons will be in New York. This is Bloomberg.
There is just a lot of demand right now for products, whether those be items for our home office or for backyard entertainment. This has been a consistent issue for the past year or so throughout various lockdowns. The global supply chain is made up of ships and trains and trucks, and it's designed for predictable patterns of demand, which is the exact opposite of what we have right now. A lot of uncertainty about whether certain economies are going to be open or closed based on the outbreaks that they're having. So we're just seeing a lot of confusion, a lot of chaos, and a lot of uncertainty disrupt the whole system. The auto industry is very reliant on semiconductors, these memory chips that are in basically everything we buy that has sort of an electronic component to it. And they come from certain economies in Asia like Taiwan, where they're having trouble meeting the demand. The supply chain issues are going to be around as long as you think the virus is going to be around. First or second quarter of 2022 is when a lot of people see the normalizing of all the shipping and transportation disruptions that we're seeing. But if they don't, we might be dealing with this for another year or two or three.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
You're slowly getting to a point. You get any type of disruption as you go into the autumn, the potential for oil prices to explode to the upside is increasing.
Because of the decarbonisation that's going on, you're not going to see a lot of extra new investment. And I think we're at the beginning of a multi-decade, potentially, bull market in commodities.
What we're seeing in Europe right now is wind and solar are great, but if the sun's not shining or the wind's not blowing, you need to have people still need electricity.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong this Thursday, September 16th. Our top stories today. Power play, Europe's energy crunch has led to huge price jumps. It's forcing factories to shut down. Will Biden's economic agenda be put on hold? Well, Congress may delay it by weeks or months, while Democratic Party progressive and moderate wings fight amongst themselves. And the fallout from the spread is spreading from Evergrande, while there's growing concern over what an Evergrande default would actually mean for the markets. Well, good morning, everyone. I'm Francine Lacqua with Matt Miller here in London. Keely Lines, we're missing you here in London. You're still in New York. The market definitely focused on some of the positives, but at the same time, Keely, worrying about China.
Yeah, I have to say, Francine, I'm feeling quite lonely on set here in New York. I'm very jealous that you and Matt get to be together this morning. As for what the picture looked like in Asia, while things are positive, more so in Europe, it was a deeply negative session in Asia overnight. Red really all across the screen, stocks down in Japan, South Korea, China, and the underperformance coming from Hong Kong. The Hang Seng Index actually re-entering a bear market. It is heading for its worst week since March. Now, of course, there's a couple stories at play there. On the one hand, you have the continued regulatory crackdown from China, this time on casino operators, and those stocks fell again in the session, down about 5.7% as a group. And of course, the other story we're watching, as Francine said, is China Evergrande. The situation seems to be deteriorating every single day. 2 more rating downgrades today, a lot of concern about default, and that is spreading throughout the property sector. The Hang Seng Property Index down 3.4% overnight. Now, of course, there's another asset that is impacted by the property sector, and that is copper. In that property development, very key for demand. And concerns about that and a broader slowdown in China's economy weighing on copper futures this morning, down about 1.8% when it comes to LME pricing. Finally, I just wanted to point to the Japanese yen, a little bit of a haven bid earlier, but right now it's essentially flat against the US dollar. As for the picture here in the U.S., we actually saw a gain on the S&P 500 yesterday, the second time in 8 days that has happened, so we will see if we continue that today. Right now, it doesn't appear so. Futures have been fluctuating, but we're down about 3 points on S&P E-minis. Not a lot of movement in the bond market. We're up a basis point on the U.S. 10-year yield, sitting right around that 131 level. It is a broadly stronger dollar story this morning, and crude, I would note, was down earlier, but now up for a 5th day in a row. It's up more than 6% over the last 5 days, Matt. It's a supply side issue, but right now, WTI crude trading at $72.76 a barrel.
Yeah, continue to watch commodities for sure. Okay. Also, in terms of equities here in Europe, we are seeing a ton of green on the screen. The FTSE MIB in Milan up more than 1%. The DAX and the CAC both up a little bit more than 0.5%, 0.8% gains on the CAC 40 and on the IBEX in Madrid. So across Europe, we do see gains in equity indexes. I would like to note one equity in particular. Up in Ireland, you see that there's a 2% gain. Maybe you can't see it, but it's very bright up there. That's because Ryanair is such a heavy weighting, and Ryanair is boosting its forecast big time for carrying passengers in the coming years. In fact, by 2026, Ryanair sees 50% passenger growth from pre-pandemic levels. That's up from 33% previously. They expect to carry 225 million passengers in 2026, and this is driven not only by growth in demand, but also by growth in their 737 MAX fleet, their Boeing fleet. So this is really boosting airlines across the sector. It's going to be boosting or plane makers, I should say, as well. Look for anything connected to airlines to rise today because of this Ryanair news. Here you can see the shares up more than 5.5% in Dublin. Francine?
Yeah, and we're, of course, looking at energy prices. I mean, without a doubt, one of the stories of the day that's really concerning. I mean, I don't speak about fertilizers that often on TV, but of course, this energy crunch.
But when you do.
But when I do, we go full on ahead. It's forced a major fertilizer to actually cut and shut down 2 UK plants. Now, look at what's ahead today. There's more U.S. data coming out. Traders will be watching for retail sales and weekly unemployment claims. Now, there will be an informal meeting of EU Trade Policy Committee in Slovenia, 1 p.m. New York time. The German Chancellor Angela Merkel will also meet French President Emmanuel Macron for dinner in Paris. They're expected to discuss Afghanistan and European issues. Now, we had this whole, I came in and I was like, this is kind of a big deal just because, Angela Merkel's stepping down on the 26th of September. Now, this not only changes the face of Germany, but also of Europe. But then you kind of wonder, meeting with Macron, if it really has any impact on foreign policy.
Right, she's a lame duck chancellor,
Right.
but I think she's still such a powerful figure in global politics that it's still important to watch.
And such a brain.
And such a brain. She's a chemist, I believe. Her husband's a physicist, or maybe it's the other way around. I thought your Germany special was amazing yesterday, and I have to just say, I got so much feedback from clients, from friends of mine in Germany, just who watched the show. I mean, having Christian Saving on a panel with Joe Kaiser for, what was it?
An hour.
An entire hour was just so cool, and I hope that we'll be able to use that throughout the rest of the week. I mean, going up to the election, it's very cool.
You know what?
Although I like Kaiser had his blazer on like a cape, almost like an evil Bond villain.
I love that. I quite loved it. And he was giving back, I have to say, to some of the other chief executives. What was interesting is that they all asked for a real concrete economic plan from whoever becomes the next
They
chancellor.
want a little bit of spending energy. They want a little bit of fiscal power
The
to help.
details.
Exactly.
Now, natural gas and power prices in Europe have continued their record-breaking run, and now it's raising fears about supply security this winter season. In an interview with Bloomberg, the Chevron chief executive warned of high energy prices and supply crunches.
Reliability matters and affordability matters. And so if costs go up, consumers don't like that. And if reliability goes down, it creates real problems. And so it's one of the reasons that we have to be very thoughtful about changing the mix. And I think what we're seeing in Europe right now is wind and solar are great, but if the sun's not shining or the wind's not blowing, you need to have, people still need electricity.
Let's get more on all of this with Bloomberg's Danny Berger. Danny, I mean, how much longer does this crunch persist, and how much of a nightmare is it for companies?
Oh, well, it's absolutely nightmares. You were talking about some of those fertilizer companies in the UK having to shut. Goldman warning that there could be more blackout for industry. And in general, the fundamentals of this picture don't look good, and that suggests that this could drag on for some time. You have low stockpiles when it comes to gas. You have wind inflow just not really keeping up to where it usually is. And that means that prices have been skyrocketing. Let me show you what those look like. So Dutch front month futures for natural gas, they've moved up. They've quadrupled so far this year. And look, if you look to this side, it's come down ever so slightly, but still extremely elevated compared to historical prices. And we're not even in the winter yet. So the fear is that this could just continue to get worse.
Yeah, and of course, for our listeners on London DAB Digital Radio, all you really need to know about that chart is it's a line that goes pretty much parabolically upwards. So, Danny, let's talk about the response to this. How are European governments reacting?
Well, in general, the response, be it from France, Greece, Spain, has been to try to cap what consumers are paying because, of course, this can translate into a political issue if you have all of a sudden your voting base having to pay more. So if you're Spain, you're looking at putting taxes on windfall profit. If you're Italy, you're looking at using state funds to help pay some of the consumers back. The UK, we haven't heard anything. But if you're an investor, perhaps what you're overlooking is not necessarily the government response, but the response from central banks. This is something Ben Emmons at Global Medley Advisors brings up, saying essentially that this is a big input into inflation. And we've already seen that impact showing through, and that might have implications for decisions by the BOE and the ECB, Kaylee.
Yeah, a lot of talk about stagflation happening right now. Bloomberg's Danny Berger, thank you so much. Now let's head over to Washington, D.C. President Biden's agenda took a step forward yesterday with the approval of tax hikes to pay for it by the House Ways and Means Committee. However, the plan still risks getting delayed by weeks or even months in Congress as other issues are still unresolved amid Democratic rifts. Jack Fitzpatrick, Bloomberg government reporter, joins us now from Washington. So, Jack, we're making progress. Just how far away is the finish line?
They're not very close to the finish line. Yes, they did move forward in the House on the tax measures and some other key measures yesterday, and they have been inching forward through their markups. But for one, we saw that they couldn't initially get their prescription drug pricing measures out of the Energy and Commerce Committee because they had 3 moderate Democrats opposed to it. They later actually got that out of a different committee in Ways and Means because it's the same jurisdiction. But the fact that they have had now, I count 4 moderate Democrats at certain times voting against things in markups means it's a very difficult path forward in the House, and they still have to negotiate with the Senate. So you are going to see changes to what is in the tax bill, some of the drug pricing measures. We're really sort of still near the beginning of the process, and you should expect significant changes to a pretty wide variety of what's in these bills right now.
Speaking of negotiations, Jack, the president is meeting with CEOs on vaccines. He wants them to mandate, I guess, either mandate the shot or require testing. The latter seems like a little bit of an easier sell. What's the story?
Well, the alternative to companies with more than 100 employees is weekly testing requirements. They've got a little bit of time to implement that, but that obviously, it may be an easier sell to people who are opposed to getting vaccinated, but setting up a required weekly testing regime, that is a logistical challenge. So there has been pushback from conservatives on this. It's something to watch, probably more in the courts if there are legal challenges to this going through OSHA rather than a congressional debate. But there has been pushback on the right, and it is a pretty significant requirement saying that larger companies would either need to require that vaccine or have a weekly testing regime put in place.
Jack, thanks so much. Jack Fitzpatrick there of Bloomberg Government. Now, over to China. Intensifying concern over the impact of China Evergrande Group defaulting, which is rippling through the nation's financial markets. Now, this comes after Evergrande's onshore unit actually halted bond trading after a domestic rating cut put it among the country's riskiest issuers. Now, let's get straight to Tom McKenzie, our China expert. Tom, we've been talking about this for quite some time. It feels like now what it could be maybe systemic?
Possibly. This is a pivot moment, I think. We've seen this in the last couple of days. Look, we talked about the news flow on this company. So the local bond unit that stopped trading, you highlighted that. The S&P downgrade, the fact that they've brought in advisors around a potential restructuring of this company, the government saying that they're going to miss interest payments. But what's happened in the last 24 hours to 48 hours is that the property sector more broadly has felt the pain on this. Double-digit losses for some of the biggest real estate companies in China. You're seeing it play out in the high-yield dollar bond space as well. Which property dominates? The real estate dominates in that high yield space. You're seeing yields at 18-month lows, up to 15, 16%. The banks are being hammered as well in China because of their links to the property sector, of course. So the broader question is, does this become more systemic? Some economists have said China is going too far, too fast in trying to de-risk its real estate sector, which, don't forget, accounts for between 20 to 30% of China's GDP.
But they could be successful, right? I mean, I realize that this is sending ripples across the financial sector, but they do want to restructure. So is that a possibility, Tom? Could they have a successful restructuring and then move on?
I still find it hard to believe that they're going to let this whole thing fall apart. But we saw with the case of Huarong, which was their big bad debt manager, asset manager. It was meant to take all these bad loans and sort them out. We saw with that in our own reporting that there was infighting between different ministries. So the risk is there that China's officials and technocrats who are smart and well-read and on top of things are infighting, and they could let this one slip. I still think the base case is they manage this to some extent. The risks are there. And again, the question marks about if they're going too far and too fast. And anyone who thinks that Evergrande is isolated, by the way, in terms of using wealth management products and doing some dodgy dealing, they're living in cloud cuckoo land.
Potentially major ripple effects. Thank you so much to Bloomberg's Tom McKenzie for always staying on top of all the cuckoo land activity, Matt. All right.
All right. I just thought, I love the phrase.
It's so
a good
British.
phrase.
It's a great phrase.
It kind of encapsulates.
All right,
all
we're gonna get back on track now. Let's take a look at some stocks moving in free market trading here in the U.S. One mover to the upside is one of the newest public companies out there, On Holding. Of course, it's a running shoemaker backed by Roger Federer. It made its public debut yesterday, a 46% gain, greeted very warmly by the public markets, and it looks like those gains will continue. The stock up about 2.4% in today's session. Another stock moving to the upside is EA Sports. Yes, it is delaying the introduction of its game Battlefield 2042 until November 19th, but analysts say that's really not a surprise. Plus, the company reiterated its full-year guidance, so that stock is up 2.2%. To the downside, though, and this is something, of course, we've been following with Tom McKenzie and really all week long, casino operators. Macau crackdown from Beijing. That is weighing for a third day on Wynn Resorts. It's coming off its worst 2 days since March of 2020. The loss is continuing in early hours this morning. That stock down about 2.25%, Francine.
Kaylee, thank you. Now, coming up, we'll talk retail with Stacey Wilditz, president of SW Retail Advisors, and a deep dive on precious metals with the chief executive of Shabane Stillwater, Neil Frohnman. We'll talk gold, and we'll talk luxury. Matt Miller's going to love this. This is Bloomberg.
So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up, and it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Francine Lacroix here in London. Kaylee Lines is out in New York. I saw an amazing chart on the MLive blog today. And for those of you listening on London DAB digital radio, I'll just recommend get on your Bloombergs when you get to the office or when you get to your terminal back home, if you have one there. Check out MLIV Go for this chart. It goes all the way back to the year 2002, and it shows the U.S. Empire State Manufacturing Survey. It's prices, basically inflation. It also shows manufacturing delivery time. And it's amazing the breakout we've seen. So many people have said this inflation is not like the inflation we saw in the 70s and 80s. David Rubenstein was saying, if you think this is inflation, then you haven't lived. But it is serious compared to the last 20 years. I mean, we're seeing 50% inflation in prices and a 40% rise in delivery time. So, Noor, it's a real problem. Noor Al-Ali joins us from Bloomberg Markets Live from the MLive blog. And what do you see, what do you hear from clients in terms of the inflation that we're experiencing?
Well, realistically, there are two camps, right? The first camp says, by the way, look at the energy crunch. We've been seeing inflation and prices rise persistently throughout this year, and that's a concern. But you've got also Camp Fed that says, hey, no, it's transitory. It's absolutely fine. Even if the CPI print will come in a little bit higher than our 2% target, it's still within range. I don't know what that range is, of course, because it's quite elevated. But here we are right now.
I mean, I love the fact that Ray Dalio said, you know, if you haven't lived through inflation, you haven't lived. I felt like a very rich 4-year-old when 1,000 liras in Italy, it was like worth $50, like 50 cents or something like that. Nora, how do we know if inflation is sticky? So if I buy my cappuccino double the price or 30% more than last year, does it readjust when supply chains go down?
Well, look, I mean, that's really the question. That's according to the suppliers of whether or not they choose to reduce their prices. And now I know a lot of the times now we're talking a lot more about stagflation and all of that stuff.
Yes, stagflation. The mentions of stagflation have jumped. I saw that chart this morning as well. So more and more people are coming on our programs and saying stagflation is a real concern.
And people freak out. Markets freak out.
I wouldn't freak out. I'm not too concerned right now. And I think my Eddie colleague and I were talking a little bit earlier about that. I mean, look, a stagflation environment is you know, when inflation comes in pretty high, when employment is quite high, and then growth is kind of slowing down as well. But realistically, growth in the United States is quite high, even at the level that it is right now. Even if it comes down from that to the 2-3% level, that's still quite high. I mean, I wouldn't worry about that so far. Realistically, I'm more worried about the energy crunch and gas prices right now in Europe.
Yeah, especially if you're a company that has to rely on that.
There is something you're worried about.
Yes.
Good. Okay.
Yes.
As long as you're worried about
something. I always say it's good to worry about 30% of the things, but not maybe 70%. Nora Al-Ali there of Bloomberg Markets Live. Now, for more market analysis from Nora and her team, just go to MLIV Go on the Bloomberg terminal. We'll have plenty more market reaction coming up. This is Bloomberg. After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union. The EU has gone out of the window with Brexit.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua and Matt Miller in London. Now let's get the first word news. And there's speculation about the future of Macau following China's decision to tighten its grip on the gambling hub. Beijing wants to appoint government representatives to supervise casino companies. It also wants to boost local shareholdings in the companies and require them to get approval before distributing dividends. Australia is joining a new Indo-Pacific security partnership with the U.S. and UK. The agreement was unveiled by the leaders of the three countries in a virtual meeting. The partnership has France upset because it allows Australia to acquire nuclear-powered submarines. And in 2016, Australia had agreed to buy as many as a dozen subs from the French. And it may be a new era in human spaceflight. Elon Musk's SpaceX has launched 4 civilians on a 3-day orbital excursion. The passengers in the Dragon crew capsule include tech billionaire Jason Isaacman and a childhood cancer survivor. It has been reported that Isaacman is paying SpaceX $200 million for the flight. He's also donating $100 million to charity. So, Matt, I must admit, 8 p.m. when this launch happened is past my bedtime, and I know it was the middle of the night for you and Francine in London, but I watched the replay this morning, and it never ceases to amaze me when humans go up in space.
Well, and you can watch it on Netflix, right? Sure. Because they're doing a documentary. I think it's so cool that this launch brings so many mega cap tech companies together because it's a SpaceX thing, so it's involved Tesla, obviously, plus you've got Netflix. Yes?
What will it take you to go to space?
I would go in an instant. I would go in an instant.
Okay, I want the experience. Like going up for like 1 minute and a half.
Not for a minute. No. I want to go into orbit.
Right,
I want to get onto the ISS. Meet that Russian guy up there who's, he's been there for 6 months and not seen another human, and he's got like 6 empty bottles of vodka floating around.
That's what I want. The real experience.
Yes.
Okay, well, I'll be watching you guys from the ground.
Okay.
Haley's not coming. She's going to stay here and watch Evergrande.
Bloomberg surveillance from space. The market, actually the market wall from space, I'm sure we can get a Bloomberg terminal up there.
That'd be pretty cool.
Yeah, it would be very cool. Coming up, we'll talk retail sales ahead of today's data with Stacey Wilditz, President and Chief International Store Hunter at SW Retail Advisors.
electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose for this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance, Early Edition. I'm Francine Lacqua with Matt Miller in London, Kaylee Lines in New York. Matt, so we talked about the markets. So we saw the S&P 500 after 6 days of going down straight yesterday, finally going back to levels we saw in August. And then that Goldman Sachs headline about the Bank of England, they are expecting interest rates to go at 1% by 2022. We also saw the similar move by Bank of America. This is inflation, and inflation in the UK is probably higher than anywhere else, also because of Brexit.
Yeah, Brexit really doesn't help. And you've got not only the shipping costs and the labor shortage, but now you've got energy prices that are off the hook. So it's really driving prices up around here. And yeah, Goldman Sachs expects the BOE to hike rates in May of 2022. The BOE is going to bring its bank rate to 1% by the fourth quarter of 2023, according to Goldman Sachs. So I don't know if that's their terminal rate forecast, but back up to 1%, which in today's world seems like a lot.
It's a lot.
Yeah.
It's a lot, especially when you are where you are with mortgages right now. Now, Kaylee, Matt mentioned the energy story. How's it all playing out in the markets?
Well, definitely in terms of natural gas prices, we've seen that play out. But the broader markets in Europe really don't seem that concerned, and that the stock 600 is actually higher right now by about 0.75%. The only two sectors not in the green are utilities, so that may tell you something right there, and basic resources. I'll have more on that in just a second. When it comes to S&P 500 futures, as Francine said, we did have our second update in 8 days yesterday. Right now, though, it doesn't look like those gains will hold. Not a lot of movement in the futures market. We're down, though, by about 0.1% on S&P 500 futures. In the bond market, yields are ticking higher. We're up the better part of 2 basis points right now on the U.S. 10-year yield, sitting right around 131. And then, of course, I talked about how basic resources in Europe is down. That is an industrial metals story largely. A lot of this has to do with concerns about growth and property development in China. But copper is under pressure today, futures down about 1.7%. And that move lower in copper is reading through to some equities here in pre-market trading in the U.S., one of them being Freeport-McMoRan, the materials company. It's down 1.6%. And then as we've been discussing all program and really all week, the casino crackdown in Macau on the part of Beijing continuing to weigh on U.S. casino operators that also operate in Macau. Wynn and Las Vegas Sands each down about 2.75% at the moment. And then I just wanted to mention Beyond Meat as well, getting downgraded at Piper Sandler with a $19 price target. That would be about 14% downside to yesterday's close. Right now, the stock is down about 2.5% in pre-market trading, and it is trading at $108. Francine.
Now, investors awaiting U.S. retail sales coming out a little bit later today. Joining us now is Stacy Valditz, SW Retail Advisors President. Stacy, thank you for joining us. So how exactly has consumer behavior changed? Are we spending less frequently but shopping more, or are we just shopping online?
So what we're seeing is that the consumer is consolidating their trips. So when they go to the stores, they're buying a lot more. And they're also buying full price because there's no inventory out there and there's nothing on sale. The other thing that we're hearing is that back to school shopping started a little bit later this year, as maybe parents are a little cautious. Are we really going back to school? But again, I think the big theme going into holiday is inventory shortages. And by the way, not just in Vietnam, we have a bunch of log jams here in the UK as well. So you're going to see operating margins at peak and consumers clamoring for inventory.
Stacey, what's an international store hunter?
I heard you say that in the break. So it means that I travel all over the world full time. I'm in stores and I never sleep and I'm always jet lagged. That's what it means.
So are you still, even during the pandemic, have you continued to travel around and check out international stores?
I have where I've been allowed to. So yes, and I've been very actively traveling recently. And certainly, you know, one of the things I picked up recently in the UK was that still Brexit, a lot of the particularly footwear guys are still having problems getting their inventory in here. So some of the fall stuff is running weeks late. That is not helpful when inventory is already tight.
Well, let's kind of talk about inventories and supply chain issues. We saw Nike getting downgraded at BTIG earlier this week, not because of anything having to do with demand. It's all about supply and factory closures in Vietnam. How intense are supply chain issues for retailers right now?
They're very intense, but you know what? This is not a new story. I'm positive on Nike. I mean, we've known about the supply chains issues for a while now. So I think when you look at Nike and half of their footwear is coming out of Vietnam and Vietnam is shut, that's a major problem. And they're doing their best to shift it elsewhere. However, long term, if you think about all these brands now that are crunched for inventory, what they're doing is they're selling full price. They're training the consumer to pay full price and not expect discounts.
Okay, yeah, so that's... It's a really interesting point, Stacey, because obviously higher input costs, they then try and pass those on. But is there any sign that consumers are getting less tolerant for those price increases?
Not yet. They aren't. And I think they're not expecting those kind of Black Friday promotions, the ones that we've had in the past. And last year we didn't have them either. So last year trained the consumer not to expect.
Stacey, how much more are we going to spend online? So if you look at, you know, for example, some of the penetration of the grocery stores, or actually just stores in general in the UK, it's still only 30%. Do we get to 60% in 3-4 years?
I think we could be at 50%. And of course, it depends on the category. So apparel is already 50+%. You know, Inditex yesterday reported, and they're talking about 25% a quarter of their business online. A few years ago, that was half. So it's really accelerating, depends on the category. You look at other things like home furnishings, you know, Williams-Sonoma, 70% of their business is online. So we're going to 50% pretty quickly.
Wow.
All right, Stacey, thank you so much. Stacey Vidlitz there, SW Retail Advisors President. I mean, I was trying to think what I don't buy online, Miller, and I'm probably not the benchmark, but is there anything that you only buy in store?
Motorcycles, I will only, but I do all my shopping online first, and then I'll do a test ride, and then I'll go to the dealer.
There you go.
But no, you're right. I mean, we're buying more and more stuff online. Groceries, which I previously would never have bought online, now I'm only buying online. Yeah. And there are things, you know, like toothpaste and toilet paper that are just like
definitely
on subscription at Amazon. So
I mean,
yeah,
the only thing that holds me back is something that I could return. I'm just too lazy to return. So that's the only time where if I'm not sure, I'd go in brick and mortar. Now, coming up, Commodities Check, we speak with Neil Froneman, rather, Chief Executive of Shibani Stillwater, a precious metal mining company. I'm sure I butchered the name, so we'll get the right pronunciation as well.
Sibanye.
That's close next. Enough. This is Bloomberg.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Francine Lacroix in London and Kaylee Lyons in New York. Now, we had some pretty shocking car sales news in Europe this morning. To the downside, new registrations across Europe fell 18% from the same time last year. For those listeners on London DAB, we're looking at a chart that goes back to 2011, I should say, but it's really just the month of August that's important here compared to the same month in 2020. A big drop, and if you look at the full year, we've still seen growth over the horrible, terrible, no good pandemic year, but that growth has really been slashed. In fact, at the mid-year, we were up about 50% compared to last year, and now we're only up about 33%. So it's really come down as the chip shortage has impacted the production of cars. And the impact of the chip shortage on the production of cars then also affects the demand for precious metals like platinum and palladium, which are used to make catalytic converters. You don't need as much of that stuff if you can't produce as many cars because of the chip shortage. Joining us now to talk about precious metals is Neil Froneman, the CEO of precious metal miner Sibanye-Stillwater. Neil, thanks very much for joining us. How do you see the impact of the chip shortage affecting the precious metals space?
Yeah, good morning, Matt. The disruption that has been caused by the pandemic, you're now starting to see play out in things like chip shortages. There's other supply chain issues, and it's not a demand problem. This is a supply problem of components that go into cars. So we expected a volatile, let's say, normalization period before things get back into balance. And you're seeing it play out now. It is certainly not a demand problem. It's rather a shortage of supply. Demand for vehicles is as high as it's ever been, and in fact, it's reflected in second-hand car prices and so on. So we have expected this, and we've planned for it, and it'll probably continue into early 2022 as supply chains.
Well, Neil, let me ask you. The demand is high, of course, but producers, a lot of them, at least they're telling us, that they're switching over to electrification, to EVs. And what I wonder is, if you no longer need a catalytic converter, but you still need a ton of silver for your electric vehicle motor, do you see a shift in the demand for precious metals?
We see a transition, Matt, but this transition to electric powertrains is going to take a long time, probably 5 to 10 years before you really start seeing the overall impact. And I want to point out that electric vehicles or electric powertrains are not only driven by batteries, they are also driven by fuel cells, which also use some of these precious metals. The other thing I want to say is there's good history that says when a new technology replaces an old technology, everyone always overestimates the impact of the new technology. In other words, the old technology also improves at the same time. So this shift is going to happen. Don't get me wrong. It's going to happen, and it needs to happen. It's the right thing, but it's not really going to have a significant impact on precious metals because there's a transition to the hydrogen economy as well.
But Neil, at the same time, I keep on hearing from some of the rare earth producers and some of the miners that there's going to be a shortage of some of these critical components used, or some of these critical metals used for components and chips, and for example, hydrogen, some of the electrocatalyzers that will come at the forefront in 5 years. So are we underinvesting in this space?
Absolutely. You're going to see a shortage of what we call green energy metals across the entire landscape. And that's why we feel as a company we're in such a good position. Whether you talk lithium, whether you talk platinum, iridium, any of those metals, the only one that is really under risk in the longer term is perhaps palladium, but all the rest have very good fundamentals.
Neil, what's the most concerning thing about the chip shortage right now? How much does it actually shift prices in the short term, 6 months, in the longer term, and in between?
Yeah, I think that what we will see and experience is in a lot of inflation, because there's no doubt that the chip suppliers are going to use this to push prices like any commodity does under a deficit scenario. That may impact the demand for cars. It could even create competitive technologies, not technologies that are going to affect us, but in the longer term, I also think there's some good that's going to come out of it. I think the regionalization of supply chains, which the pandemic has highlighted, and hence you would have seen an announcement we made this morning of investing in a lithium project in the US for US battery manufacturers. So regionalization is going to happen to make sure there's security of supply as well.
But let's talk about what it actually means for prices for platinum group metals. What is your expectation on the trajectory of prices, given that they have softened a bit in recent weeks?
Yes, so I've always maintained that something like rhodium should be at about $10,000 an ounce. It's happened to come down to that now. I think palladium is stable for the next 4 or 5 years, probably at about $2,200 an ounce. In my mind, there's going to be a transition where palladium is replaced with platinum, and platinum prices should go back up to around $2,000 an ounce in the longer term. And we certainly don't use that in our planning, but that is my expectations. We're more conservative in our planning.
Neil, thank you so much for joining us. Neil Froneman there, Sibanye-Stillwater Chief Executive. Now coming up, a new era in human spaceflight. More on SpaceX's successful launch next. This is Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua and Matt Miller in London. Well, I know Francine and Matt were very jealous yesterday when SpaceX successfully launched 4 civilians on a 3-day voyage circling the Earth. Now, the flight, dubbed Inspiration 4, is a milestone for the company. Our correspondent Ed Ludlow was at the Kennedy Space Center for the launch.
For SpaceX and the Inspiration 4 crew, this was a success from launch right until the moment that the Dragon capsule carrying them separated from the second stage booster and continued on its journey deeper into space. The crew have now reached a cruising circular orbit of 585 kilometers above the Earth. That is a record for SpaceX's Dragon capsule and spacecraft, and they will spend 3 days orbiting the Earth, conducting some scientific experiments, including looking at human physiology and human biology. One of the crew members, Chris Ambrosky, says he wants to play a ukulele while he's up there. NASA officials told me, actually, that SpaceX has agreed to share all of the data from this mission with NASA for free. They'll be gathering information like radiation levels at that distance from the Earth, what kind of space debris is out there, and on a successful return back to the coast of Florida for the capsule, NASA engineers will be able to inspect the heat shield on the underside of the Dragon capsule to basically see how it fared in an orbit at that distance. In fact, the Inspiration 4 crew will spend the most consecutive amount of time so far in a Dragon capsule. Of course, SpaceX has ferried NASA and other space agency astronauts to and from the International Space Station, but that's a 24-hour journey where they can get out on the other side. This all-civilian crew will spend 3 days. SpaceX say that this is a supply-constrained business. They say they have a backlog and a list of willing, paying customers who want to replicate this experience, but they have to do one successful attempt first. Remember, Jared Isaacman, the CEO of fintech company Shift4 Payments, is funding this whole expedition. He's the mission commander, but also its benefactor to the tune of a reported $200 million. The other members of the crew include Haley Arsenault, who survived cancer as a child and went on to be a physician's assistant at St. Jude, who are one of the other beneficiaries of this mission. The mission hopes to raise $200 million for St. Jude as a part of the profile of space that this mission is giving. In another example, Dr. Siam Proctor almost became an astronaut in 2009 through the NASA selection process, but she was not successful, and this has given her another avenue in order to get to space. But the plan right now is for them to orbit for 3 days and hopefully touch down off the coast of Florida sometime between Saturday afternoon and Sunday morning. Ed Ludlow, Bloomberg News in Cape Canaveral, Florida.
I mean, imagine that. You go to space, and what you really, really want to do is just play a ukulele. Tom Keene, our co-anchor of Bloomberg Surveillance. I mean, you'd probably, learn Italian in space, right? Do
Tom
something
does
useful.
play ukulele.
Yeah, but not in space.
I thought that was a superb report by Ed Ludlow. We do have to translate for Mr. Ludlow. 585 kilometers is 364 miles, and that's a big deal. That's where the Hubble spacecraft orbits, among other things. But the symbolism here, Francine, Matt, and Kaylee, is just exceptional. There's no other way to put it. I think this trip has been way, way underplayed. Bezos is a celebrity. Branson is a celebrity. Baloney. This is factors a bigger deal than what Bezos and Branson did. Let's go to the chart quickly here. I'll be quick on this. Guys, Standard & Poor's 500. Let's take it from the orbit of John Glenn. When I faked I was sick so I could stay home in 1962, the end of the Apollo mission, and up we go.
From the great state of Ohio?
The last space shuttle mission, and the gentleman from Ohio spanned over to today. It's a stunning linear function of capitalism.
All right, Tom.
I want to point out also Neil Armstrong from Ohio. Imagine that one state in the United States of America could create so much innovation and so many presidents. I think 8 presidents are from Ohio as well.
One thing I've learned, OH?
I-O.
There you go.
Nice job. Nice job.
Yeah, Tom doesn't know what to say. Tom's lost for words.
He's from Rochester.
I think that Ohio's heritage is the fabulous state schools, the heritage of engineering, but as Matt Miller knows, it goes right back to the Wright brothers.
Yeah, absolutely. In Dayton, and I mean, Sloan Kettering has roots there as well. So it's in across so many industries.
What is this, the Chamber
Buckeyes.
of Commerce for Ohio and London? Is that what this is this
We're
morning?
learning. I know. Watch out, Miller from Ohio.
He's going to force you to watch Buckeye football. That's what he's going to do.
I mean, I think
Ohio
it's on the
State
cards.
University. Tom, thanks so much for joining us. Tom Keene there, co-anchor of Bloomberg Surveillance. Let's get to what we're watching today. And Kaylee, you're watching U.S. retail sales. We just talked to Stacey Vidlitz. What are you expecting?
8:30 a.m. Eastern time. Economists are expecting a 0.7% decline on a month-on-month basis. But guys, a lot of that is going to have to do with autos. When you back out autos and gas, we're expecting it to actually be flat. But obviously, we could still be looking at the third drop in retail sales in 4 months, which points to a pullback in consumer spending. How much can we blame the Delta variant for it? And what signal could that send about the trajectory of the U.S. economy in the third quarter, Matt?
All right, I'll definitely be watching for that data point as well. I saw a story cross, though, this morning. Australia wants to buy nuclear subs, or late last night, nuclear subs from the U.S. and the U.K. And this is a huge deal, not just because of the size of the contract or of the military might that it's going to help Australia create, but because, you know, as Francine was talking about earlier, Angela Merkel is going to meet Macron today, and they're going to be talking, at least for a little bit, about building up the European military might. They can no longer rely as much on the U.S. and now, of course, on the U.K. and Australia joining that alliance. The European powers are going to have to build their own military.
But it's also funny because the French are furious. So I don't know if it's funny. I mean, I'm married to a Frenchman, so there's nothing that makes me laugh.
It amuses you when the
more
French
than
are angry.
The French are, but basically, the French are really furious, especially at Joe Biden, because they cut out France and Europe from this deal. So you're kind of left with your hands in your pockets saying, right, what happens next for Europe? Now, more Bloomberg surveillance coming up ahead. They'll be speaking to Dr. Jennifer Nuzzo of Johns Hopkins on vaccines. This is Bloomberg. China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper, and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
day, it's quality of business that wins out.
We are seeing some of that wage pressure begin to filter through.
The Fed that has the pedal to the metal, and inflation is down the list of worries.
So long as China keeps slowing down, that's really going to cause problems for the Fed.
I wouldn't be shocked if we have a correction here. We're going to get one at some point.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Ferro, together with that fella in the bow tie. If you know, you know. Equity futures down 6 on the S&P. We're negative a little more than 0.1%. TK, before we go there, let's talk about the data out a little bit later this morning.
Data important, more important than it was 2 or 3 days ago, John. We've had those two bouts of, well, maybe it is inflation, a little bit less so. To dovetail it into retail sales this morning makes it more important than it was early in the week.
Shall we have a discussion about that fella down under? Tom Keene, a serious story developing between the United States, Australia, and the UK.
Percolating right now, and really the battles here are tantamount. It is about the distance from China to Taiwan. That's what this is about. And down below, the South China Sea, the Philippines, over to Vietnam, and far below, Australia. And John, the overlay here is defense contracts and gazillions of French francs and US dollars. Paris is furious.
Lisa, I hear the French government is incredibly furious.
Yeah, the French government, but also, frankly, the Chinese government. I do wonder how much this accelerates the spat between the U.S. and the U.K. and China, and how this manifests itself, not only from a military standpoint, but also economically.
Let's kick it off with the equity market price action this morning. It's a big morning for economic data in America. This week has dragged on and on and on. It picks up 8:30 Eastern time. Claims, retail sales, just around the corner. Futures in 6 points on the S&P. We're down a little more than 0.1% after a bounce in the equity market yesterday. I'm looking at the same thing as you, TK. Dollar strength out there, bleeding right the way through G10. Euro dollar negative 117.69, negative 0.4% there. And Lisa, a lift on yield. We're up 2 basis points, 131.58 on 10s.
Exciting. I do wonder how much markets will move on that 8:30 a.m. print. Perhaps not at all, but I do think that actually it has more import than usual. U.S. August retail sales coming out. What I'm curious to see is the deceleration that we're expecting. What will be the market reaction to it, especially given CPI and where we came in? Are we getting some pushback from consumers able to absorb some of the price increases that we've seen? We're also going to be getting initial jobless claims, which are expected to tick up on the hurricane disruptions. Then at 9:40 a.m., we get Cisco Systems Chair and CEO Chuck Robbins joining, I believe, a property that John Ferro will be hosting, the Open later on. I'm curious to see how much he talks about supply chain delays, chip shortages, as well as how much people are adapting their personal offices to working from home. And then at 10 a.m., we get July business inventories data. This feeds right into the same conversation with all the supply chain disruptions. The idea here that they have to restock ahead of the holiday season at a time when they don't know how quickly they can get things, just as a sense of how much these disruptions have increased costs. If you take a look at the shipping costs from Shanghai to Los Angeles, they've nearly tripled over the past year, John.
Lisa, thank you. Very collegial with the promo for the Open a little bit later this morning.
I am genuinely interested. I'm not just being collegial.
Thank you. You watch Bloomberg TV. Don't listen to Tom at 9 o'clock, 9:40 Eastern time. TK, a special congratulations for the team over at SpaceX and Elon Musk.
Oh, this is just superb. We don't want to take the time here and lose Russ Kosterich, but John, this has been way underplayed. I take immense issue with the earned celebrity of Mr. Bezos and Mr. Branson. This is a far, far larger accomplishment into orbit. Think John Glenn, 1962, 365 some miles up, orbiting with the Hubble Space Telescope. This is real space.
Let's spend a little bit more on that, Tom. A little bit more time on that a little bit later. Let's get to Russ Kostrick now, BlackRock Global Allocation Fund Portfolio Manager. Russ, let's start right here. You've trimmed your equity exposure just a little bit. Walk me through the thinking going into year end.
Well, good morning, Jonathan. So, it's not that complicated. I think our view is the stock market is going to end the year higher than it is today, but we are in a period where I think risk is a little heightened. One reason, seasonality. I think people are well aware this is seasonally the toughest part of the year. Second, the uncertainty around the Delta variant. And finally, something that both you and Lisa have been mentioning, supply chain disruptions. This is a big issue. It's affecting the pace of growth. It's affecting prices. And it's something we're not used to. We're always used to talking about demand in the post-GFC world, but at least in the near term, this is another factor the market's going to be dealing with. Having said all that, we think these are temporary issues, and looking out 6-9 months, stocks are higher than they are today.
So where are you trimming, Russ?
We've been trimming a little bit of our cyclical exposure. One place we have been trimming are the financials. We were overweight financials earlier in the year. We've actually brought that down. And part of that is the evolution of our thinking about rates. Ourselves included have been surprised about how tame the long end of the U.S. curve has been. And what we do think we're going to see some normalization of yields, particularly in real yields. We're not likely to see the melt up that people were worried about earlier in the year. You know, you look at bond market volatility, it's been coming down and down and down.
So, Russ, here's what I'm struggling with. A lot of people are talking about this correction, this supposed correction that's supposed to happen that everybody wants to buy. And yet it seems like we've had trigger after trigger when it comes to disappointing data or signs that perhaps Delta is slowing the economic recovery in a meaningful way for more than just one quarter. What's the trigger at this point, given all of that is very well known?
Well, I think there are a couple things, you know, one of which we haven't spoken about yet is Washington. Now, I don't think there's anything there that represents a long-term issue. We're still getting fiscal support. We're getting, obviously, a lot of monetary support, but we are likely to get some headline risk as we get later into the month, as we get into October, and Congress wrestles with not only the budget package and the reconciliation package, but also the debt ceiling. Now, again, to be clear, this will ultimately get resolved, but we are likely to see more headline risk than we've been used to in recent years.
Russ, I look at where we are now and the optionality forward. As you know, everybody's with their narratives. You've got a narrative. I know it's radically different than Jeff Rosenberg's narrative as well. How do you manage in the multiple sets of narratives that are out there right now?
Yeah, Tom, I think this is the ultimate question. You know, you have to start with a baseline. What is it you expect of the market? Our baseline, I think, is pretty straightforward. Yes, the economy is decelerating, but we expect better than trend in GDP. We do expect inflation is going to be transitory, contain yields. In that environment, with tremendous cash flow generation, we are still very long equities, even though we have been trimming. We want some cyclical exposure. We want to pair that with the secular growth areas that we expect to work for year after year. We're less enamored with duration as a hedge, and instead we look at other strategies, whether that's being long the dollar, whether it's using volatility as an asset class, and then you manage from there. You manage as unexpected events change your narrative, but that's our baseline right now.
How do you manage, maybe it's off your remit, I don't think so. How do you manage commodities? John Farrow mentioning Francisco Blanche at Bank of America with $100 oil. How do you manage commodities out 1 year, out 2 years, out 4 years to win?
Well, I think it depends on the commodity. We actually do think that oil prices are going to remain firm in the near term, and we've been having some tactical positions to take advantage of that in the equity market. Other commodities we're less sanguine on. You know, one place where there's been a big change in our portfolio is gold. 14 months ago, we had a fairly significant position in gold. Today, we've reduced it to almost zero. Why is that? Well, because we primarily think of gold as a hedge against equity risk. And that works when you've got an environment when real rates are flat or declining. If part of our view is that real rates normalize a bit, that particular commodity is unlikely to work as well as it did in the middle of 2020.
Russ, that's really interesting. A hedge against equity risk, but not inflation per se. Why is that, Russ?
You know, I think this is a very important point. You know, gold is often spoken about as an inflation hedge. I don't think that's wrong, but you have to look at very long horizons, measured in decades, you know, well beyond the investment horizon of most fund managers. If you're thinking about the near term, there are probably better hedges against inflation in the equity market. And rather than own an asset that doesn't produce any cash flow, we would rather hedge some of the near-term upside in inflation with stocks that have pricing power in the materials sector, in the industrial sector, in the consumer sector, companies that can raise prices as input costs also rise.
Russ, really good final point. Fantastic to get your thoughts on your portfolio right now. Russ Kostrick there, BlackRock Global Allocation Fund Portfolio Manager. Tom, that's fascinating on the gold point. If you want some inflation protection, find it in the equity market, not in gold.
It's been timeless there, and it is about 47% of S&P 500 return comes from dividend reinvestment, whatever that number is right now. That's the one you memorize on the exams. Lisa, can we stop the show and talk about maximum commitment?
Please, go ahead.
We have to do that. You go look at yields, and I'm going to tell the audience
I know where this is going.
Here about maximum commitment.
I don't think that there's an optionality here.
Lisa, when you are at
portfolio.
halftime and you are ahead of Liverpool,
you stop
that
watching.
is a good and beautiful thing. And Rebic and Diaz got it done in the 40-something minutes. And then I thought,
you go to the gym, Tom.
You know, Farrell had to be medicated, I think, yesterday afternoon late.
So I turned it off after 20 minutes. That's the truth. We were getting ripped apart. Really, really tough, Tom. And for anyone that remembers 2005, AC Milan had an infinitely superior football team to Liverpool back in 2005.
Yeah.
And Liverpool came back with this big comeback from 3-0 down. I don't want to talk about that too much. Congratulations, Liverpool. Well done.
Yeah, just
We're done.
dazzle
We move
John.
on.
This is the one day all year Farrell could call
Honestly,
in dead.
why did we have to do that now, Tom?
Because I'm dazzled you here. I was certain you'd call in dead.
Futures down 6 on the S&P.
Call in dead.
Unbelievable. Down a little more than 1/10%.
Can I get you some Tang, John?
By a basis point. I need more than a Tang right now. Your 10-year 131.07. The division around the outlook for me is fascinating.
Yes.
And I know it is for you guys as well. This was from HSBC and Max Kettner this morning. He said the global growth slowdown is real, but expectations are not yet incorporating that sufficiently. As such, we retain our cautious view on cyclicals across asset classes. Just compare and contrast that to the likes of JP Morgan and Marko Kolanovic. Despite concerns about the recent downshift in economic and business cycle momentum, we remain confident that strong growth lies ahead. Tom, there's a real divide there on Wall Street right now.
Maximum divide, and again, it's wrapped around a natural disaster, this pandemic.
Tom Keene, Lisa Bravitz, Jonathan Ferro, Football Free Zone for the next couple of hours, I hope.
Jordan
anyway.
Henderson got it done.
Maximum commitment.
Did you like that goal? Anna Hand's going to join us on the equity market. Wells Fargo Securities equity strategist from New York City this morning. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. This may be the start of a new era in human spaceflight. Elon Musk's SpaceX has launched 4 civilians on a 3-day orbital excursion. The passengers in the Dragon crew capsule include tech billionaire Jack Isaacman and a childhood cancer survivor. It's been reported that Isaacman is paying SpaceX $200 million for the flight. He's also donating $100 million to charity. President Biden's economic agenda risks getting delayed by weeks of months in Congress. Tax, healthcare, and other issues are still unresolved. Plus, there's continued squabbling between the Democratic Party's progressive and moderate wings. The House committee did wrap up work yesterday on some portions of the package, including $2.1 trillion in tax increases. Turns out those latest cruise missiles tested by North Korea this week were fired from a train. That's according to the country's official news agency. It suggests that Kim Jong-un has a new option for a quick strike against U.S. allies in the region, such as South Korea and Japan. Advisors to the Centers for Disease Control and Prevention will meet next week to discuss coronavirus booster shots. The meeting takes place after President Biden's September 20th target for the shots rollout. That means the government effort will likely be delayed for a few days. The outside experts advise the CDC on how best to administer vaccines. The risk of a battery fire has General Motors playing it safe. GM has told some owners of the Chevy Volt electric car to park and store the vehicles at least 50 feet away from other cars. That's to reduce the risk of a spontaneous fire. GM has recalled all of the 142,000 Bolts sold since 2016 to fix the problem. Global news 24 hours a day on our own Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I want to ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just two girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Of each of our nations, and indeed the world, depends on a free and open Indo-Pacific enduring and flourishing in the decades ahead. This is about investing in our greatest source of strength, our alliances, and updating them to better meet the threats of today and tomorrow.
The President of the United States on an important new partnership with Australia. From New York City this morning, good morning. Alongside Tom Keene and Lisa Bramford, I'm Jonathan Ferro. This Thursday morning, your price action shaping up as follows. Going into retail sales and claims a little bit later this morning. Futures down 6. We're negative a little more than 1/10%. Into the bond market, yields higher, a single basis point, 130.90 on 10s. The story of the moment, cross asset, it's got to be in foreign exchange, TK. Dollar stronger, euro weaker here. Euro dollar negative 0.4 to 117.70.
There's some nuances here as well, really led by the euro weakness that we see in the debate out there, strong dollar, weak euro. But again, the Pacific Rim is maybe what I would watch. I'd also note renminbi's strength, and Goldman Sachs out with a note today, John, speaking up renminbi's strength here is one of the outcomes of the Beijing sport. Right now on Asian sport, Jack Fitzpatrick joins us. We have 7 things to talk to him about in too short a space here. Jack, the distance from the north of Queensland and Cairns to Taipei is 3,300 miles. Maybe it spans America. And it is something where submarines reign supreme in their secrecy. We have an uproar this morning as Mr. Biden teams up with Australia to protect Taipei. Is it that simple?
Well, it may be focused on Taipei and Taiwan. It's also a bit broader in terms of protecting shipping lanes. And obviously, it's a more complex issue than just that because of the expansion of nuclear-powered submarines to a non-nuclear state. So there are the questions that President Biden and just this morning in Britain, Prime Minister Johnson were trying to defend that this is not in conflict with any nuclear accords, and also playing up that this is not specifically supposed to be an adversarial action toward China, but sort of supposed to be focused on greater regional stability. Of course, China is at the center of this, but it's kind of wading into a few different tricky issues that they're trying to navigate.
What is the symbolism of this moment for defense, for state, for the president, versus what we saw with President Trump? The event of this yesterday, I'm going to suggest catching everyone by surprise. What was the symbolism versus Trump?
Well, this kind of snuck up on people. We had heard not that long before, about a day before, that he'd be speaking on a national security issue at 5 p.m. yesterday. There wasn't that much of a buildup. It was somewhat of an event. Obviously, anything that can be construed as tough on China probably would have been played up more by the Trump administration. In terms of the symbolism, a tough on China approach is something that Biden seeks to share to some degree with the Trump administration, but this was probably not quite as much of the fanfare that you might have expected from the Trump administration.
Which raises a question, Jack, of why now, right? I mean, it seems like sort of a tenuous moment given the supply chain disruptions and other issues that have come to the fore with respect to China's markets for the U.S. to kind of poke the bear. Why now are they willing to go into this kind of endeavor?
Well, we're still fairly early in the Biden administration, and it is a time when they're not absolutely struggling with some other foreign policy issue. They had really wanted to focus on the Indo-Pacific since Biden got into office, and of course they juggled crises in the Middle East with Israel and Palestine, the pullout of Afghanistan, obviously still an issue, but not going very well. I'm not sure I have a clear explanation as to why right now, but it's a priority for the Biden administration, and it's something they probably want to get on early in the administration.
What does this mean in terms of the next steps that the U.S. is likely to take following the phone call with Xi Jinping and Joe Biden that ended without much really decided?
Yeah, they've inched forward on the relationship with China without, a real. Your phrase "without much decided" has kind of been the phrase of the day or of the year for the Biden administration. But in terms of its relationship with China, we don't exactly have a readout of exactly what comes next. But these kinds of issues of sort of a greater presence and a greater reliance on